Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, January 28th. We are live once again, and today is the second day post Nvidia's largest decline in its history, losing $590 billion in one day, 17% of Nvidia's market capitalization wiped out. Today's the second day. And we're going to see how the market reacts, what the market has to say. It's up a little bit in the pre-markets right now, kind of dicey. It was up 5%. Now it's up 2%. We're seeing some stocks recover. Some stocks continue to stay down. So I think today's going to be a very, very, very important day in terms of trying to figure out what's going to happen, how the market's going to react, where the macro is going to take Nvidia, how the macro is actually thinking of future guidance by a lot of these CEOs that are reporting tomorrow. Tomorrow is going to be an insane day. Meta, Microsoft, Tesla, and JPow. And quite frankly, I don't know if Nvidia recovers that much today outside of after Zucks and Nadella reaffirmed their CapEx guidance. I think that's when Nvidia probably gets a little bit more momentum. But today's going to be an interesting day to see how Nvidia reacts to the broader market dynamics that are going on. And we have some new updates on who bought the dip yesterday, what demographics bought the dip, how much of the dip that they bought. And we'll talk all about that and see how that implicates Nvidia going forward as well. So we got a lot to talk about when it comes to Nvidia. We got Trump yesterday. Trump introduced some new tariffs, I guess you could call them, and the 10-year is reacting. Let's see how the 10-year is reacting. A little negatively. 10-year's up a bit on this news. He wants to tariff a lot of stuff, and we'll talk about what he wants to tariff. He also wants to get rid of the federal income tax. I don't know if that's possible, but nonetheless, that is an idea that he's putting out there. And then we also got Sam Altman with a response to Deepseek. Late last night at around 10 p.m., Sam Altman came out with a Twitter thread, which doesn't really get rid of the bearish skepticism around Deepseek. It kind of reaffirms parts of it, but it also reaffirms this idea that we're going to need a lot more compute. And so implicitly, I do think Sam Altman is saying probably buy Nvidia on this dip, given there's going to be a lot more chips that are needed to make NVIDIA and AGI become a lot more real. So got a lot to talk about, a lot to get into, a lot to get through, and we're going to get started on it here today. Again, tomorrow is going to be insane. We got Meta, Microsoft, Tesla, and JPow, so we're going to have a lot to analyze tomorrow and a lot to go through, but today is going to be very important just in terms of seeing the second day of how NVIDIA interacts after its worst day in history. So let's get into it. Thank you, everybody, for being here. Okay, everyone's asking for the intro. I have the intro. I just didn't think it's appropriate yet to play the intro because the intro is very upbeat. It's fun. It's like exciting. It's like music and stuff. And I'm like, well, today's kind of, the second day after a lot of people lost a lot of money in the markets. I just personally didn't feel it was appropriate to like play a really fun intro on a day where shit sucks, or like for some people, a lot of people that are in the semiconductor space, it's the second day of shit sucking. So I just didn't feel like playing the intro. You know what we'll do? We'll do it on the market close. We'll do it on the market close. We'll do it on the market close. Not on the open. Wow, a lot of you guys want it. All right, the market close. We'll do it on the market close. We'll do it on the. How dare you not clown my losses a bit, dude? In general, dude, I literally 5 minutes before we went live, I played the intro to myself. And I was like, this is a very happy, upbeat, exciting intro. I just don't feel like the vibe is very upbeat given NVIDIA's down 15% and a lot of people lost a lot of money. So it's just one of those, all right, let's just, not play this today. We'll do it on the close. We'll do it on the close. We'll do it on the close. So we will be there. Thank you, everybody, for being here. Good morning, good morning, good morning. Blake, I'm Beneficial, Alex, Dougie, Kyle, Maddie, Jarrett. Thank you, everybody, for being here today. Sanjay, we will play it on the close. I promise. We'll play it on the close. We will play the intro. What if the whole chat for the rest of the day is like play the intro, play the intro? We'll do it. We'll do it on the close. I might need two different intros though, because every day then, if you guys watch the open and the close, you're gonna hear the exact same intro every single time. So I don't know. We might have to make two of them. So all right, we're getting started. We're gonna play it on the market close. We're gonna do it on the market close. It's a good one though. I like it. And if you guys hate it, you guys can let me know. But I liked it. I worked hard on it over the weekend. I went through a lot of different copyright-free beats and tried to like get the right vibe for it. But like, again, it's a really upbeat vibe. It's fun. You're getting into the show. And then so I was just like, maybe we avoid it for this morning. But we will definitely do it on the close. Get a bull and bear intro. That's a good idea. Get one for the green days, one for the red days. That's a good idea. All right. We got to get started. So let's get into it. I want to get started with what's going on with Nvidia. Obviously, we got a lot of different things to talk about, and we will keep going from there. So first of all, let's get into the actual stock price of Nvidia right here. It's recovering a little bit, 121.92, up 3%. That's nice to see. It is not a full-on recovery, obviously, after losing 17% yesterday, but still, it's not bad that we're getting a little bit of reprieve in the pre-markets. Now, a couple stats on what happened yesterday that I think are actually pretty mind-blowing when you look at it. First of all, Nvidia lost $600 billion. These are the worst days in a row, or the worst days ever for Nvidia and for the broader market. You had Meta lose $232 billion on February 3rd. You had Tesla lose $140 billion in November 2021. Apple lost $100 billion in March 2020. Nvidia takes the cake, $600 billion, January 27, 2025. I don't think anyone is ever going to forget that day again, just given how much of that market cap was lost. Now, who bought the dip? Well, I bought the dip yesterday. I know a lot of you guys bought the dip. And given I'm a retail investor, you are a retail investor as well. Here's what we got right here. Retail investors reportedly bought $562 million, $500 million of Nvidia stock during yesterday's Deepseek-led rout. This is from Vanda Research. This is either bullish or bearish to you. To me, the jury's out, right? Because we kind of have no idea what's going on with Nvidia. Either it's going to be retail that got rich off Nvidia stock, and we know retail got rich off Nvidia stock. I mean, the toots really started pumping it around, call it 95, 110. They were not in this name when it was 30, 40, 50 bucks, and that's when retail was primarily buying it. So I do think retail made a lot of money off of Nvidia. So you would argue that retail knows best when it's time to step in and buy the dip on Nvidia when something is getting too excessive. This is what they did on August 5th when Nvidia fell from 130 to 92 as well. But you could also say it's bearish because there wasn't a lot of big money coming in to buy this dip. It was kind of more individual investors like you and I. And there might be a lot more pain, a lot more algorithmic volatility that's led that is currently not going to stop when it comes to dealing with Nvidia. So I think the jury's out on if that's good or bad, but nonetheless, $500 million of Nvidia was bought by retail investors. And I guess Nvidia is going to now have to prove how good it is and how resilient it is to deal with some of the volatility on the second day. Deepseek's response, or NVIDIA's response to Deepseek, for those that missed it yesterday, this is what NVIDIA said. Deepseek is an excellent AI advancement and a perfect example of test time scaling. Deepseek's work illustrates how new models can be created during that technique, leveraging widely available models and compute that is fully export control compliant. Again, NVIDIA kind of saving their ass here and saying that, we think they got the chips in a very legal way, so don't say that we illegally gave them the chips. Now, they said right here, inference requires significant numbers of NVIDIA GPUs and high-performance networking. We now have 3 scaling laws, pre-training and post-training, which continue and new test time scaling. Essentially saying, hey, there's more efficiencies in how people train on top of our GPUs, but that doesn't mean that you don't need a significant number, quote unquote, of NVIDIA GPUs and high performance networking. So kind of reading between the lines, they're saying, yeah, you need a lot of GPUs. We think they probably had a lot of GPUs, even if they have new creative ways to be able to train models on top of those GPUs. But nonetheless, the architecture and infrastructure that is needed in order to make those GPUs operational are still NVIDIA GPUs. And you shouldn't get it twisted. That's how I'm reading the NVIDIA response yesterday. Now, we also had someone that is very important in the AI ecosystem named Sam Altman, and he had a response yesterday. And, well, here's what he had to say. DeepSeek's R1 is an impressive model, particularly around what they're able to deliver for the price. We will obviously deliver much better models, and also it's legit invigorating to have a new competitor. We will pull up some releases. So you got Sam Altman saying, all right, it's good. We're going to do much better. So that's kind of the sort of the competitive side of him coming out. But he's happy to have a new competitor, which I guess is bullish in terms of how he's thinking of it. Then he says, but mostly we are excited to continue to execute on our research roadmap and believe more compute is more important now than ever before to succeed at our mission, aka buy NVIDIA. The world is going to want to use a lot of AI and really be quite amazed by the next generation models that are coming. Looking forward to bringing all of you AGI and beyond. So Sam's take is, hey, we need a lot more NVIDIA chips. We're happy that we have a competitor. We think this competitor is going to be a worthwhile competitor, but this is not a competitor that's going to put us out of business, and it's not a competitor that's going to stop us from doing what we need to do in the case of bringing AGI. Now, what is Sam talking about here? In my opinion, I think Sam is talking about the argument that we've heard pretty much throughout the past 24 hours. If you listen to any analyst that's bullish on NVIDIA, Stacy from Bernstein kind of made this argument. And I'm kind of buying into this argument more and more, that regardless of the creativity that is going to be deployed against training on these models, which is not just happening in America, but happening internationally, which, by the way, should be happening internationally. Like if we're going to assume that Nvidia is, or that AI becomes a real thing and everyone has access to these GPUs, at least to an extent, then people will innovate and find different ways to get creative with how they're training on top of their GPUs. If that's the case, then it's not that Nvidia is going to be less important. It's just that more people are going to build on top of the infrastructure that exists, which means we're going to have more AI applications, more AI agents, more self-driving, not just in Tesla, but in a lot of these other OEMs, as per Nvidia's Cosmos platform, more humanoid robotics. And if we're going to have more and more and more of this stuff, more consumer AI, that's not really a thing on the iPhone yet, but hopefully in the next year, we have some real Apple intelligence. If that's happening, we need more compute. And if you assume the NVIDIA thesis is no, we need more compute versus less compute, then you buy NVIDIA because you think this is the dumbest dip ever and that NVIDIA is going to cleanly beat the earnings estimates over the next couple of years, and that the street is just kind of scared right now, but getting scared for a reason that is rather irrational. Speaking of someone who benefits a lot from NVIDIA, Perplexity CEO, they have integrated Deepseek's R1 model into Perplexity, which is a $50 billion or $9 billion company that is essentially an AI search engine. And because it's open source, they don't have to deal with the censorship. So for example, they incorporated Deepseek's R1 open source model into Perplexity. They asked it, who's the president of Taiwan? And it gives you an actual answer, not a censored answer that the CCP would not want you to get. This is kind of the fear I think the market's having, which is that, okay, if this open source model is so good that you can incorporate it, run it locally, why do we need to be paying hundreds of billions of dollars for ChatGPT's proprietary model? And then Sam Altman's argument is like, hey, DeepSeek's model is good. We're going to be better, number one. Number two, if we want to really get to GPT-10, GPT-15, GPT-20, GPT-100, we're going to need a lot more chips. Which is why Sam Altman, if you guys remember, a couple months ago, he was trying to raise $7 trillion. Now, that didn't happen. We covered that story a long time ago, and obviously he didn't find $7 trillion, but he got kind of close with $500 billion via Stargate, which is essentially all going to prop up OpenAI. And the reason Trump likes it is because he doesn't give a shit about OpenAI. He cares about more jobs. And if we build hundreds of data centers, those are hundreds of thousands of jobs that are going to be beneficial for something like, the American public, which is what Trump cares about. So, oh, wow, we got a headline right here. Binance is under investigation for money laundering, tax fraud, and drug trafficking in France. That's from Reuters. Just came across the screen. There you go. Okay, Binance. We'll keep up with that story and see how that one plays out. So in general, Sam Altman doesn't think this is the end of the world, and most of the NVIDIA analysts don't think this is the end of the world either. However, you do have some analysts coming out and saying, actually, we are a little concerned about this, and we're not buying the easy answer that quickly. This is what Morgan Stanley said. We are cutting our price target to 152 from 166, which is a pretty substantial decline when you realize that every dollar for NVIDIA equals $25 billion that moves. That's why NVIDIA moving $1 or $2 is a big deal, because they have 25 billion shares outstanding. So every buck is another 25 billion. Analyst notes DeepSeek's AI innovations might be deflationary, causing a surprising market reaction. This could lead to export controls or reduce AI spending. The analyst adjusts semiconductor stock price towards downward, but stays optimistic about the sector. The other part of this that's also very important, and why NVIDIA might be taking a 17% hit, is because if the Trump administration comes to the conclusion that China has too much access to AI, then they could potentially have harsher export controls. If they have harsher export controls, that could lead to NVIDIA not being able to sell as many chips, which again could hurt revenues. Now, China's already a small part of NVIDIA's revenues, but if it becomes an even smaller part and NVIDIA is struggling to grow theoretically, that could be something where the street is not necessarily happy about. Here's Trump yesterday talking about DeepSeek AI and what it means for American industries, which actually we'll talk about is pretty bullish for the hyperscalers.
Last week, I signed an order revoking Joe Biden's destructive artificial intelligence regulations so that AI companies can once again focus on being the best, not just being the most woken. Today and over the last couple of days, I've been reading about China and some of the companies in China, one in particular, coming up with a faster method of...
Let me play this video, guys. That audio kind of sucked. Let me play this one. This is better.
And we're going to get it done again very quickly. Now, I think I do it with an executive order because they didn't go through Congress. I got it approved through Congress. So I think we get it done fast. But It's going to be, that can supply all of Asia with its location. All of Asia can be supplied by Anwar. So there's so many things, but we don't want to have any future president ever sabotage our economy with out of control regulations as the last two Democrat presidents have done. They went crazy. Last week, I signed an order revoking Joe Biden's destructive artificial intelligence regulations so that AI companies can once again focus on being the best, not just being the most woken. Today and over the last couple of days, I've been reading about China and some of the companies in China, one in particular, coming up with a faster method of AI and much less expensive method. And that's good because you don't have to spend this much money. I view that as a positive, as an asset. So I really think if it's fact and if it's true, and nobody really knows if it is, but I view that as a positive because you'll be doing that too. So you won't be spending as much and you'll get the same result, hopefully. The release of Deepseek AI from a Chinese company should be a wake-up call for our industries that we need to be laser focused on competing to win because we have the greatest scientists in the world. Even Chinese leadership told me that. They said, you have the most brilliant scientists in the world in Seattle and various places. But Silicon Valley, they said, there's nobody like those people. This is very unusual when you hear a DeepSeek, when you hear somebody come up with something. We always have the ideas. We're always first. So I would say that's a positive. That could be very much a positive development. So instead of spending billions and billions, you'll spend less and you'll come up with hopefully the same solution. Under the Trump administration, we're going to unleash our tech companies and we're going to dominate the future like never before. And finally, we need to work together on a defense bill that once again fully rebuilds our military for our great warriors. We have to have a strong.
So that was Trump yesterday. I don't know why the audio is like that. That's not fake. He was at a GOP event in Florida. It's real. I don't know why the microphone was acting like that, because all the videos you go to, whether you go to Fox or Forbes or any of the one that's reporting, the audio sounds kind of iffy. So that probably had to do something at the event. Nonetheless, notice what Trump says. He says this is bullish because costs are going down. So kind of thinking from a business perspective, which makes sense. But then he also says our AI companies have to wake up in the United States. And to me, what that means is buy the other Mag 7. Because essentially, what was the biggest narrative around Google going into 2024? Lina Khan, the FTC, they're going to shut them down. They're going to get rid of YouTube, Google Chrome, et cetera. They're going to just make so many regulatory burdens that it's going to be tough to own Google stock. And that was the narrative that was holding Google back at like 165, 170. That narrative's gone. And I think with the advent of something like DeepSeek, the Trump administration that wants the United States to be the leader in AI, the easiest thing to make us not the leader in AI is take away American companies' ability to compete. And in particular, if Google doesn't have all the resources they need to be able to succeed when it comes to artificial intelligence, because they're dealing with an FTC that's trying to break them up, that's just not going to work. And obviously, that's not going to be good for shareholders. That's definitely not going to be good for American national security if you believe that Google being a leader in AI matters. So I think DeepSeek, in some respect, woke everybody up, especially in the Trump administration when it comes to understanding what it means for companies in America to be valuable in AI. And that should be rather bullish for the broader hyperscaler sector, even if it's not necessarily the most bullish for Nvidia in the short term. Meta, by the way, hitting another all-time high in the pre-markets, up another 1%. Just incredible. They were upgraded to 700 by a couple firms today, and the entire synopsis of their upgrade was that not only do those firms think they're going to keep spending on CapEx, but they also think the open source revolution is here. They think the closed source models might be a little bit better than Meta's, but not substantially better. And if Meta keeps investing in open source models, they're going to be able to get a lot more customers using their models and eventually be able to monetize that in the back end. And that is why the street is getting pretty excited about what Meta's growth could be like. The street's expecting about 46 billion in revenue and $6.73 of EPS tomorrow after the bell. We are going to get those results from Meta. Palantir right now is at 74.66. Palantir is down about 1%. For those that didn't see the Palantir clip yesterday, in the midst of all the Nvidia turmoil that we dealt with, there was a little bit of talk on Palantir on CNBC, basically making the argument that the large language models are commoditized, and Karp is probably laughing about all this.
Josh's point about the large language models, I'm a big fan of Alex Karp. I'm sure he's kind of laughing today at Palantir because he's been saying forever, LLMs are the commodity. It's what you build on top of that is what's going to create the return. And so if Masa and Larry Ellison and Sam Altman are building all these data centers to go just infer for OpenAI, I think you call that into question.
So again, the broader argument that LLMs don't matter, how you operationalize them matter, aka Foundry and AIP. And that's why, although Palantir is getting hit because it's a high beta growth stock and Nvidia falling means Palantir is probably going to take a hit, it doesn't really question or challenge the thesis of Palantir. Okay, it looks like we got a headline right here, and then we'll get into some of the earnings we got this morning. OpenAI launches ChatGPT for government agencies. A ChatGPT product for government agencies. Yeah, here we go. Here's the headline. We just got it. Before I even read the article, my initial reaction is I don't know if government agencies want to trust ChatGPT off the front, but nonetheless, OpenAI looks like they're offering it. OpenAI announced its biggest product launch since its enterprise rollout. It's called ChatGPT Gov, and it was built specifically for U.S. government use. OpenAI bills the new platform as a step beyond ChatGPT Enterprise as far as security. Okay, so we got to assume that security and governance for OpenAI is going to be sophisticated enough to be implemented in the US government. Here's what they say. The Microsoft-backed company now bills the new platform as a step beyond ChatGPT. It allows government agencies as customers to feed non-public sensitive information into OpenAI's models while operating within their own secure hosting environments. Since the beginning of 2024, OpenAI said that more than 90,000 employees of federal, state, and local governments have generated more than 18 million prompts with ChatGPT, using the tech to translate and summarize documents, write and draft policy memos, generate code, and build applications. The user interface for ChatGPT Government looks like ChatGPT Enterprise. The main difference is that government agencies will use ChatGPT Government in their own Microsoft Azure Commercial Cloud or Azure Government Community Cloud, so they can manage their own security, privacy, and compliance requirements. An OpenAI spokesperson told CNBC that the company acknowledges there are special considerations for government use of AI, and OpenAI wrote in a blog post today, Tuesday, that product is subject to its usage policies. Okay. Cool. Is that why Palantir dumped? It could. This could be the reason Palantir took a little bit of a hit if the market thinks that this is going to be competitive with Palantir's government business. I think we have to get more details on this. From my understanding, again, based on the types of contracts Palantir wins and the 20 years of pretty much no issues Palantir has had in regards to securitizing and making sure government information is governed correctly and is kept safe, that would give the government more credence to go with something like a Palantir over a ChatGPT. But it also comes down to how expensive is it? It comes down to political relationships. Microsoft obviously owns a ton of ChatGPT. Microsoft has a ton of government contracts in regards to Azure Cloud. So being able to negotiate those deals together, I mean, there's a lot of stuff that goes into this. But this could be an argument for, why Palantir gets hit. Now, granted, Palantir is it's not just used as a chatbot. There's a lot more high-level sophisticated use cases when it comes to the DoD. And it looks like what ChatGPT is describing for government agencies is like the IRS needs to summarize a document and it uses ChatGPT. And the IRS agent probably already wants to use something like ChatGPT, but it's banned from their government computers, obviously, because they can't have that sensitive data in there. So it seems like this is just more of a safer, secure version for them to use it, which might actually be good for the government, potentially. Or good for ChatGPT and good for the government, but it also might be a little bit more competitive with some of these other arguments as well. So, yeah, I don't think this is that serious of a deal, but it could be something that increases ChatGPT's go-to-market. The thing here, though, is, again, I don't think it even matters if ChatGPT is selling to the government. I think OpenAI has fundamentally lost some significant parts of their moat. If Deepseek can build what they've built for significantly less, which is a fact, even though Deepseek has a ton of GPUs, the training models that they used, or the strategies that they used has been verified as, yes, it cost a lot less than what OpenAI has been doing. And the model is almost the same as OpenAI outside of all the Chinese propaganda. So I think it broadly questions if you've invested in OpenAI at 150 billion, is it actually worth 150 billion? Or could it be worth $1 trillion? Because if you invested at 150 billion, you're obviously investing for $1 trillion exit. You're assuming a 10x or much more than that. Is OpenAI actually going to get there? I think that is the broader question. Grok as well. Yeah, I mean, look, I think Grok is catching up. Grok has proprietary data. So there's just so much competition to the foundation models. And it begs the question, can they actually build sustainable forms of revenue, either in the subscription tier or through advertising, which I don't think OpenAI really loves the whole advertising model, so they want to go direct to the consumer. Will people pay? Will people pay at the end of the day? This is the headline right here from Bloomberg. French investigators have opened judicial probe into money laundering, tax fraud, and drug trafficking. Other charges against crypto platform for Binance. CZ, who's the founder of Binance, he went to jail for, I think, a year, and then he was released in late 2024. Bitcoin down a little bit on this news, down about 1% right here. Bitcoin's still holding nicely, dude. It was at 97,000 yesterday when Nvidia was at its worst and rebounded above 102. It's looking like 100,000 might seriously start becoming support for Bitcoin, which would be incredible, even if it doesn't go that much more beyond it. The fact that it's staying at these levels is not the worst thing in the world. And you got Bitcoin right here at 102, even with the Binance investigation that is going on right now. Okay, so that's what we got on Nvidia. We will talk a lot more about it at 9:30 and keep going from there. I would not be upset to buy the dip again today, especially if we stay in this 120 to 122 range. Would I be surprised if Nvidia gaps all the way up to like 125, 126? No. Would I be surprised if it goes back to 117, given the narrative is kind of hit on Nvidia? I wouldn't be surprised about that either. Nvidia right there, 120, 148 in the pre-market's up 2.58% right now. The most surprising thing to me about Nvidia is that they didn't recover yesterday. They went down, they stayed down, and the selling pressure continued to be so expansive that it just kept hitting a new low. And then finally, 116.7, it bottomed, and it rebounded up to 118 to end out the day. But it was not a fun day for NVIDIA. $600 billion in a day gone. I mean, I was hearing some stories about NVIDIA employees that were like, they just joined the company. They just got their stock options at like 130, 140 bucks. This is the hard part about Silicon Valley. If you join when the company is mooning, like I remember meeting a Robinhood employee that joined in 2021. His stock option strikes were at 40. And then Robinhood fell to $6, right? And then I met some other Robinhood employees at their gold event that joined and they got their stock options at $10. So it's just like the time you join and the market dynamics kind of determines your equity compensation. And if you just joined NVIDIA at 150, 145, and that's where your strikes are for your grants, you're probably really annoyed because those are like potentially millions of dollars that you're down on paper right now because of what's happening. So today's going to be the second day where we see how the market makers react to it, how hedge funds react to it. I still think there's a hell of an argument that Chinese hedge funds went short because they knew this was going to happen and they made a lot of money off of it. There are some reports that are claiming they have evidence that they know that Chinese hedge funds did it. If they did, it's a smart move. It would be another form of manipulation that the Chinese government is implementing in some way in the United States. Let's check if Deepseek is still number one. This is the other thing that hurts, dude. Like, we can't ban Deepseek. I mean, we could, but Trump would have to like reverse his stance on TikTok because he loves TikTok. So theoretically, he should love Deepseek. Deepseek's still number one in productivity. Let's check in the broader app store. Deepseek still number one, dude. I don't know how the hell these guys got number one. Because do people care about Deepseek on Twitter? Yeah, because there's a lot of tech nerds. But like the general public, do they actually care about Deepseek? I guess so, if they're number one on the App Store. And we showed this yesterday on the close. This is another reason why it's really unbelievable for the people that are using this on a daily basis, outside of running it on your your own open source model, like locally, because then that takes away some of the harm. But Deepseek stores all of your data in the People's Republic of China. We store the information we collect in secure servers located in the People's Republic of China, and they track every IP address, keynote pattern, and device info from where you're logging on, and obviously the content that you type into the large language model, and they store it in China. And it's one of those things that's like, it's like, why are we using this thing? Like TikTok, I get it. It's these stupid videos that brainwash Americans, and like you scroll through it and it's an algorithm, and it's like, all right, like, although it's dumb, like I get how it can manipulate you, but this thing is just like, you don't have to use this. ChatGPT is still better. Grok is still better. And still people are downloading this as number one, which is insane. Just absolutely insane. So I guess we're going to see how the market ultimately reacts to that later throughout the day, and definitely in 15 minutes at 9:30. Rob, thank you for the $10 super chat. Amit, do you really think Deepseek was hacked yesterday, or was it because their GPU servers couldn't handle the bandwidth? I have no idea. I'm a little skeptical of they had this massive malicious cyber attack. In my opinion, I don't really believe that to such a degree, especially because they didn't release any other details on it. So it could be that their GPUs just weren't strong enough to handle the demand, and they didn't want to act like they weren't a legit company that can handle all these new servers coming in. But who knows? It could have been a cyber attack. The thing is, we have so many more questions than answers, and that's what's making everything so. And I think the market has more questions than answers as well. But hopefully, over the next couple of days, when we get more reaffirmation of capex, we will have some more answers. Okay, let's get into earnings and let's talk about what else we've got going on. So we did have some big earnings this morning, and let's see how stock prices are reacting to those earnings. First of all, we had Boeing, which we got preliminary results a couple of days ago. I think it was last Thursday. Boeing Raiders up 4%, although they missed on revenue and EPS badly. The street already knew about it. And the beautiful thing about the stock market is sometimes it is priced in. And if it's priced in, it's not that big of a deal. So EPS, they missed 590 versus 323. Obviously, bad miss, but again, the markets already knew it. Revenue, they had a slight beat, 15.2 billion versus 15.1 billion. And so the stock is up 4% off the market, basically internalizing those results and moving forward. Then you had Lockheed Martin, which I was surprised. Lockheed Martin had a double beat or double miss. Earnings per share and revenue. It's 545 on the EPS versus 661, and then 18.6 billion versus 18.79 billion. So EPS and revenue missed on Lockheed Martin. Lockheed Martin stock right here, 503 down to 484. They're down 4%. Now, what's interesting about Lockheed Martin is that Trump is planning to create an Iron Dome for the United States, some type of infrastructure that is going to be protecting the United States. He was talking about that a couple days ago. And so if we imagine that becomes real, that becomes a real contract that the Trump administration wants to pursue, Lockheed Martin and Raytheon will probably be the beneficiaries of that. And so, yes, just like in Israel, exactly. So that would be something that theoretically could be a big, could catch a bid for the defense stocks, also for Palantir, if there is an argument for, defense software being needed on that as well. How do you say it? Iron Dome, right? How do you say it? Iron Dome. Yeah, Iron Dome. What did I say? Dome? Yeah, Iron Dome. That's what he's thinking. Of course, I said it wrong. Iron Dome. So that could be something to look forward to when it comes to LMT and then RTX. Then we got GM, which had a double beat, 192 versus 184. So they beat on EPS, and then revenue 47 billion versus 43.5 billion. They beat by 4 billion on revenue. This is the second quarter in the row where GM's beating on revenue substantially. So that was a nice beat on GM on revenue, a slight beat on EPS. And then GM right here, I guess something they said in the guidance, not the best. That one's down 5.7%. So regardless of what the stock action is like on a lot of these companies, and then Raytheon as well, they had a double beat. Raytheon is actually up 3% or up 6%, even though Lockheed Martin is down 4%. Regardless of the stock price actions on a lot of these names, the biggest companies in the world are still producing great results. Lockheed Martin, slight misses. That's why they're down 4%. Raytheon, double beat. That's great. GM, double beat. That's good. And then Boeing, they already warned us about why it wouldn't be the best. They did beat on revenue. That's up 4%. So when we factor in, and we'll get the stats in a couple of days of how many companies are beating versus missing on the S&P 500, 3 days ago, it was 75% of companies. If that stat stays in line, 70 to 80% of companies are surprising on earnings expectations by having a double beat. We've got an economy that's not in a horrible spot. At least for Q4. We got an economy that is not in a horrible spot at all. Where is Tesla right now in the pre-markets? Haven't looked at Tesla. Tesla 396. Tesla took it on the chin yesterday, dude. Down 2.3%. You would expect a sell-off from Nvidia to hurt all of the Mag 7s. Only Google, Amazon, and Microsoft got hit 2 to 3%. Tesla, and Tesla as well, but Tesla was already declining over the past couple of weeks. And Tesla's a bit more high beta, so you would think Tesla gets hit like 5 to 7%, but that didn't happen to Tesla. Apple was actually up 3%, and the running joke is that no one even believes Apple's an AI company, so Apple didn't go down when the AI sector went down, which is hilarious. But Apple was up 3%, and then obviously Meta was up as well. It was kind of proving the argument yesterday or disproving the argument that Nvidia might not need to go up in order for the market to go up. Now, I don't believe in that. Obviously, Nvidia, 7% of the S&P 500. The kind of the world rests on Nvidia. But yesterday's 17% decline, it kind of like, it took the edge off of the idea that the entire stock market is contingent on Nvidia. I remember the August earnings, everyone was just hoping Nvidia doesn't mess up the bull rally. And then Nvidia crushed earnings expectations. The stock fell 5%, 8%. But nonetheless, they had a great earnings, and that's all that mattered. Yesterday was a testament to the fact that the S&P can only go down 2% if Nvidia falls almost 20%. Apple can go up if Nvidia goes down. Tesla can basically be unscathed if Nvidia goes down. Meta can hit new all-time highs if Nvidia goes down. It was one of those things where it's like, wait a second. does the stock market actually need Nvidia to survive? Because again, going back to the logical extreme of if you believe Deepseek is going to ruin Nvidia, which again, let me make clear, I think that's stupid and I do not believe in that at all. But if Meta doesn't need to spend $60 billion in CapEx, that money goes back to buybacks and that sends Meta stock up. And that means Nvidia goes down, but that definitely doesn't hurt Meta, Google, Amazon, et cetera, if they have more money available to give back to shareholders. Again, I think we're going to hear tomorrow. All truths will be told tomorrow, because the first question on Meta's earnings call and Microsoft's earnings call will be, are you guys going to keep spending what you've spent based on the recent developments of DeepSeek? And if there's any hesitation, that's going to be an issue. And we'll be tracking that tomorrow after the bell. If there's no hesitation and Zucks is like, dude, on Friday, I said that we are building a 2 gigawatt data center that can be almost the size of Manhattan. I'm not changing my mind. Nothing that happened in China is going to stop us from being on the cutting edge of where we need to be in order to make AI as expansive as what we think it can be and to be the leaders in AI. And if Nadella reaffirms that same assumption as well, then I think Nvidia doesn't have to go up, but Nvidia definitely doesn't have to go down. And I think the market is definitely going to be waiting for that news to try to figure out how they should play Nvidia and where they think it's going to go after we get the reaffirmation of this CapEx guidance. So that's going to be what we look for going into tomorrow. The Fed is not today. The Fed is tomorrow. The Fed is tomorrow. They are not going to be cutting rates. They're not going to be raising rates. It's going to be probably a boring press conference. Honestly, it's going to be the least exciting press conference. We already know they're going to be pausing. So I don't think there's anything that exciting to look into. We'll see if Jay Powell comments about Trump. We'll see if Jay Powell comments about shelter inflation coming down, but there's not going to be any, big news coming out of the FOMC tomorrow. Let's get some updates from Ed Yardeni, his take on DeepSeek, and then we'll keep going from there. We got the market open in about 8 minutes.
To kick off a 2-day policy meeting today, this comes.
I don't think the Fed's going to be lowering interest rates for a while. The economy is doing great. We're seeing evidence that even the manufacturing sector, which has been in what I call a rolling recession, is now in a rolling recovery. So that's looking pretty good. Consumers are spending, and back to the stock market. I think what happened is what is happening in the AI market means that competition is increasing, and competition is a good thing for users of artificial intelligence, which means that while some, maybe just one of the Magnificent Seven may have some challenges here, the reality is the S&P 493 are going to be beneficiaries of very powerful and cheap and readily available AI technology. I think, by the way, some of the Magnificent Seven, like Microsoft, Amazon, Google, they're all going to incorporate AI into their technologies, into their products already. They are doing that, and that just means it'll be an upgrade cycle to a lot of the software, and they'll be able to charge a little bit more. And so I'm not crying. I'm not crying for them. I think they'll do fine.
Yeah, and I think the question becomes if this is a good thing from the broader perspective, does it validate the pullback you've seen in the one that really has had the MAGA sevens that has seemed like it has a problem just in the last 24 hours? That's Nvidia. That's a really big pullback. And I guess you could argue that the market was really valuing things on this perspective of this was going to be a stranglehold and nobody else was going to be able to make any progress with it. Or do you look at it and say this is going to increase demand for their chips too, broader applications? Yeah, well, that's the thing that always kind of kills these speculative bubbles that focus on monopoly pricing, monopoly marketing. The reality is no industry is more competitive than technology. These companies literally eat their young. What I mean by that is they create something new and novel and have a very high profit margin. And they themselves start working on the next generation, knowing that they're going to obsolete what they just put out, because if they don't do it, somebody else will do it. And we've just seen an amazing example of that here they thought they were going to have to spend tens of billions of dollars, and that would give them a monopoly position in the AI market. And some startup in China came up with Deepseek, and whether it's can deliver everything that seems to be promised, the reality is it does increase competition. And even Nvidia very graciously said, hey, this is pretty cool. And by the way, you're still going to need a lot of our chips. Maybe you don't need the high-end chips with the high margins. Maybe you can do it all with low-end chips with low margins. That's not a bad thing
for the economy, certainly.
It's not a bad thing for the economy, and it's probably not a bad thing for Nvidia, even though the market's thinking it's a bad thing, because there will be a further expansion of compute and demand for Nvidia services. We'll finish up with Ed Yardeni after the bell, but here's something I also want to bring to everyone's attention. And I noticed this really at like 7 p.m. yesterday when I was just looking at what happened in the market. And I'm curious if anyone noticed this as well. Market breadth did great yesterday. Like, we finally got this rotation that people were talking about yesterday. Financials were green. Retailers, Costco, Walmart, Target were green. Financials, JP Morgan, Bank of America, Wells Fargo were green. Meta, Apple, other Mac 7s were green. The dollar fell a little bit. The 10-year came down a little bit. We had pharmaceuticals, Lilly, J&J, United Healthcare, Merck. They were green. You had industrials, slightly red, slightly green. Real estate was really green off of that off of the housing report we got yesterday, with new home starts beating by 200,000. So even though Nvidia was red, we got some real market breadth finally happening yesterday, which is another kind of argument for the bull case in regards to the fact that even though a lot of people are overweight Nvidia, overweight semis, and they felt a lot of pain, the rest of the market kind of coming up, the S&P 493, is not bad. It's not bad at all, right? And the fact that that is actually held up as much as it held up, I think is kind of bullish. And obviously, you know, if you believe the Nvidia dip is stupid, then Nvidia will come back. But it definitely doesn't mean that Nvidia took down the whole market. Because as you can see on the screen right here, Nvidia did not take down the whole market. Some more stats on this right here. 66% of the S&P 500 companies are now trading above their 200-day moving average. This is the highest since mid-December. I remember in mid-December, it was this number was like 20% of S&P 500 companies. So that improved substantially. This percentage increased by 15 points. So that's where you're seeing a decent increase. Furthermore, 61% of the S&P 500 firms are above their 50-day moving average, up from 17% 3 weeks ago. And then this comes after 351 stocks finished up on Monday, despite the S&P 500 drop-off of 1.5%. Let me say that again. 351 stocks yesterday were green, even though Nvidia was down 17% and the S&P was down 1.5%. That seems like it seems healthier than normal. So some bright lines or some silver linings in the fact that the market sold off Nvidia as badly as it did is that a lot of that money left Nvidia and it went to other parts of the market, which is not a bad thing because it means the market is not top heavy. Even though it sucks for Nvidia, like I get it, it sucks for people that are deep in the semis. I mean, SMCI, AMD, Broadcom was down 14%. We didn't talk enough about that, but all of those got hit badly. It meant a lot of other names went and got some capital. And if Nvidia needs to chill out at the 120s for a little bit before they can make their next leg up again, although it's not going to be as fun for Nvidia investors that want to see 150, that basically had 150 2 weeks ago and then it was taken away from them, it does mean the market might be getting healthier. And this is important because we looked at a couple charts yesterday of how theoretically bubbly the market is. Now, again, the hedge back against that statement is that earnings growth has been phenomenal. But when you just look at a chart of the S&P 500's PE, it's up there. And it's up there more than has been up there in the history of the markets. And that's based on the assumption that the AI revolution is real. And a lot of these companies will have productivity gains, which will expand their margins, therefore expanding their multiples. But having some of that breadth rotate to the rest of the market is not a bad thing at all. And that's what we saw happen yesterday after Nvidia fell. All right, folks, we got 40 seconds. Thank you, everybody, for being here. We are going to see how Nvidia reacts on its second day following the worst day ever for Nvidia's market cap. The VIX is down a little bit. Maybe we get a bit of a bounce and the market slightly says it's time to recover on Nvidia. I don't think we get back all 17%. If that happened, that would be amazing. And that would be the wildest one day dip ever for Nvidia. But we're going to see. Also, SoFi, we'll talk more about them after the bell. They were upgraded by Needham from 13 to 20. That is a street high price target on SoFi. So it looks like that earnings definitely impressed some people. SoFi got a price target to $20. 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Nvidia up 3% on the day, 121.7. We were just at 122, holding on to that 3%. Basically, what it's doing is what it was doing in the pre-market. Now, Nvidia did gap up to 124 at like 5 a.m., 6 a.m. So not at those levels anymore. We got a little bit of a red candle coming right here, 121.3 on Nvidia. We'll get back to Nvidia in a second. General Motors, wow, down 9.7%. Don't know what GM said on their call, but General Motors definitely said something that was not good. Down 9%, even off of a double beat, which is very surprising. That means guidance is not the best. Palantir goes green. Palantir right here up 1%, not bad for Palantir. You got Oracle up 2.8%. You got Robinhood 1.69%, 48.54. You got Bitcoin at 102. You have Oklo up 5% after it was down about 30% yesterday. MicroStrategy's down. Interesting. MSTR 346. That's below 350. Coinbase is up 1.16%. All the Bitcoin stocks are green. MicroStrategy is red. IWM small caps are up about 24 bips. IONQ quantum computing, that's up 4.2%. ServiceNow is up 1/3%. Enphase is up on the day 0.08%. Salesforce, wow. Salesforce, another 3%. Holy crap. Salesforce was freaking up 5% yesterday. Salesforce doesn't move 7% in 2 days like that. Salesforce is a Dow Jones company. They don't move that aggressively. Salesforce right here, 356. That's basically all-time highs on Salesforce, if I'm not wrong. This is, yeah, all-time highs. Well, just under 368 was all-time high. So very close to all-time highs on Salesforce, up 2.4% on the day. S&P 500 goes green, very close to 6,000. Tempest AI, that is flat. Verizon's flat. TFC is flat. PayPal is flat. A lot of the value names that got a bid yesterday, they are flat on the day. Meta, wow, 670. Oh my. Meta, $670. I kind of love it. But I am also like, that's a lot going into earnings. And, that could be setting them up to dump into earnings. But that is a lot of green, especially considering Meta was at $605 in the pre-market yesterday. Tesla's down 1%. Apple is up 1.48%. SMCI is up 1.5%. Nvidia can't hold on to 121. And it is 10 cents away from going below 119. Incredible. This is incredible. It is incredible to see the market still not give Nvidia any support. There is no support right here at 120. It is just cracking right through. We'll see if it can hold it. 8 cents away, 3 cents away. Oh my. Wow. Market's not buying it yet. They are not buying this thing yet. Robinhood right here at 48.22. Oracle's up 1.5%. Palantir 76.10. That's up about 1% on the day. Boeing's up 5.24%. Not bad. And Nvidia falls below 120. There you go. Nvidia falls again below 120, 119.6. It's pretty insane, right? Pretty freaking insane. Like this is the mark. Like, dude, it feels like a whole vibe shift. It feels like the whole vibe has shifted on Nvidia, at least in the short term. It's either the stupidest dip ever, or it's one of those things where the market is genuinely confused. And eventually the market's going to have to figure this out. VST, this is the energy data structure play. They were down 30% yesterday. They're up a little bit, 1%. GE Veranova, another energy play. They were down 30% yesterday. They're up 3%. VRT Vertiv, another data center play. They are down 1%. They were down 30% yesterday. So none of these names really recovering. Let's go to the semis. Are the semis getting any love? Cruise lines are running. Yeah, we forgot to talk about RCL. RCL had a great earnings. I'll pull them up in a second. Semis are all red except Broadcom, Qualcomm, TSM, Marvel, and ARM. All of those are getting a little bit of love. But the rest of the semis are getting hit here right now, including Nvidia and AMD. Where is AMD? AMD, Nvidia right here. ARM is at 149, Nvidia 119.9, AMD 114.76, AMD 114.76, SMCI up about 2% on the day. Now we've got Royal Caribbean Cruise Lines. They are up 5.9%. They missed on revenue, but they beat on EPS. But they had a really good beat on EPS, and that's why they're up. What does that mean for the consumer? That means people are traveling, and if people are traveling, that is a good thing. Oil prices are coming down. That's good for the input costs when it comes to cruise lines and their overall profitability. So not bad for Royal Caribbean. Carnival, are they benefiting from that? Carnival is up 2.8% as well. So Carnival and Royal Caribbean getting some love on the day. Meta, again, all-time high, 671. Wow. Just incredible. SoFi is down below 16. I'm confused why. They got upgraded today by Needham to $20. This is weird. I have no idea why SoFi is down 3%. I was talking to Tanner yesterday, and he said guidance was not good. He was not happy with the guidance. So definitely SoFi bulls were not the happiest in regards to their guidance, even if they are sandbagging. But, I mean, it's already down 10% from yesterday. So I don't know if it needs to go down another 5 to 10% on this. But it is getting hit right now. Bitcoin 102, Robinhood probably going below 48 right here, just touching 48. Oracle 159. Also, Microsoft, Trump announced yesterday, is in talks to buy TikTok. Microsoft is down 1/3%. So if Microsoft and Oracle go 50-50 on TikTok, or maybe Microsoft gets it and Oracle's out of the deal, we'll find out probably in the next coming months what happens. But that could be a wild card for Microsoft stock. I mean, if Microsoft owned a social media platform, Microsoft tried to compete with YouTube, that failed. They tried to compete with Facebook, that failed. They actually bought 1% of Facebook for $240 million back in 2009. So they dished out a lot of money to own a little bit of Facebook. But Microsoft never had a real social media platform. So if they own TikTok, that could be rather bullish for them. But that is not confirmed yet. SoFi, wow, down almost 5%. What is going on with SoFi? That's weird. That is weird. Where is Nvidia? Are we still holding 119, 118? Oh my goodness. Nvidia, dude. Not catching a bid. JetBlue is down 17%. So JetBlue had a great EPS and revenue beat. They messed up on guidance, similar to American Airlines. American Airlines, exact same thing. They had a great EPS revenue beat, but then they screwed up on guidance. And so more people are flying United and Delta over JetBlue and American Airlines. And that's why this stock is down 17%. Tesla's at 390. Tesla is at 390. We haven't seen the 380s on Tesla in a while. Well, actually, no, we saw it yesterday for a very brief moment in the pre-markets, and then it bounced up. But Tesla looking like it might fall back below 390. Amit, do you own SoFi? Yes, I have some shares and I have some options. Options I bought at around $7. Shares I bought at like 17. Not a ton of shares, but it was like 200 shares at that range, and then options from September last year. Boeing right here at 183, that's up 5%. Palantir 76.11. Google 193. Google is green. Robinhood is green. I am thinking of buying the $45 Robinhood Leaps for January 2027. This is something I wanted to buy for a while, but the Robinhood kind of went out of control and ran away from me. So we're finally getting some red on Robinhood. Let's see if it can actually get down to 45. But if it doesn't, I might pull the trigger on those. I think Robinhood's earnings growth is keeping it up. Barring an economic recession, I do think Hood's going to be able to obviously be $45 in 2 years, but definitely outperform throughout the rest of the year. And it's funny because this Nvidia thing's not really hurting Hood either. Like, I know Hood's down from 52, but that's sort of a natural retracement because Hood was up from 38 to 52 last week. But Nvidia, I mean, it's more people buying and selling and trading, and Robinhood's just the toll booth in the middle that collects it. So outside of Robinhood's assets under custody come down because Nvidia fell 17%, that's not really necessarily bearish for Hood. I'm shutting down until Technical Tuesday. We will have Technical Tuesday later today, and we'll see what Jason says about all this stuff as well. Reddit, is Reddit catching a bid? Reddit right here, 187. Reddit's up 3.8%. Reddit's up 3.8%. Grab, we already checked Grab. Is Grab up or down? Grab is down 0.5%. I mean, when you say Leaps, do you mean buying a call or selling a put? I mean buying a call. I mean buying calls on Hood for that 45. They would be in the money calls. I would sell calls against them, but it would be buying a call. I already have puts on Hood. I already sold some puts at 48 or 47 yesterday. So I don't know, dude. I just again, Robinhood is one of my largest convictions. I can see them actually benefiting from a lot of this volatility. The only way that they get screwed is if we have a legit recession, because then people stop trading. If you assume they don't have a recession, their earnings growth and their catalysts are just so substantive, dude. Everyone that has doubted Hood for the past year, they have found a way to just keep executing. And I think they've got a lot more products coming up this year. They're not going to stop executing just because of Nvidia. And that should lead to outperformance. And, the entire street has $65 price targets on Hood going into next year. The 10-year's up a little bit, 4.559. And that's probably because Trump talked a little bit more about tariffs. We'll talk about that in a second, but he did mention he wants to have more tariffs on steel, copper, aluminum, pharmaceutical products, all that stuff. So that's probably causing the 10-year to gap up a little bit. JetBlue right here down 17%. Apple right here at 234. Wow, Apple up another 2%. Apple up another 2 freaking percent. Tesla in the 380s. Nvidia goes red. Nvidia goes red. Nvidia is now red. There you go. 118 on Nvidia. Dude, it can't catch a bid. It cannot catch a freaking bid. I mean, goodness gracious. Palantir 7602, that's holding up nicely. Robinhood at 47.90. Robinhood holding 47 like a champ, not letting go of 47 yet at all. Oracle just went red with Nvidia. Oklo just went red with Nvidia. That was up 5%. That went red. ServiceNow just went red. Enphase just went red 2%. What are the other data center plays? VRT is now down another 3% after being down 30% yesterday. VST is slightly green, holding on just a little bit. This is the Nancy stock that she bought 2 weeks ago, but this one is also down substantially from yesterday. Nvidia is 117. My goodness, dude. Holy crap. Holy freaking crap. Shopify. Why is Shopify up 4%? I don't know why Shopify's up 4%, but I'm happy it's up 4% because that means Nvidia is not taking down Shopify. like at least Nvidia is not taking down these other companies that really aren't correlated with Nvidia at the end of the day. So that's good. S&P just went red. S&P slightly red on the day. Let's see. S&P 500. Let's pull it up. S&P also the SPX, Palantir just went red as well. They ended at 6,000 yesterday, which wasn't crazy. Still at 6,000, down a little bit on the day, but still holding at 6,000. Is Shopify up for any reason? I don't know. I'll check if there's a headline. If anyone has any headlines, let me know, but not sure why Shopify is up. It looks technical. It doesn't look like there's any major headline here. Oh boy. So yeah, 116.7 was the Nvidia low. So we have to see if Nvidia breaks that or if it can hold it. Palantir again, just going red. Nvidia, SoFi down 3.6%, SMCI down 4.5%, Lockheed Martin down 5%, Google now red, Oklo again red, Nvidia. Wow, Nvidia it broke 116.9. It broke it. It just hit 116.6, 116.62. Just broke the 116.8 low from yesterday. Wow. Are the whales selling? I mean, someone with a lot of Nvidia shares is offloading, or a lot of people that have Nvidia are offloading. It's either a lot of people or a small amount of people with a ton of shares, but it's more red than green. 89 million shares of volume on Nvidia. 89 million shares of volume on Nvidia. This is interesting. This is interesting on Nvidia. Second day in a row, market's not budging its narrative. You know what this means? This means that all the analyst reports that came out yesterday that were bullish didn't have an impact. Jensen's impact, or Nvidia's PR, whatever they put out yesterday, didn't have an impact. Sam Altman yesterday saying, hey, we need a lot more compute, didn't have an impact. You had professors at Stanford tweeting yesterday, hey, like Deepseek is cool, but we're going to need a lot of compute, didn't have an impact. Nothing had an impact yesterday on the market's perception of this stock. And I think the market also is a little jittery because if they're thinking this is Cisco 2.0, they're trying to get the hell out. But I don't think it's Cisco 2.0. Like, I don't think that's happening. And it's a pretty massive overreaction. But nonetheless, it doesn't matter what I think. The market is not comfortable with Nvidia right here. Microsoft right here at 433. JetBlue down 20% on the day, getting absolutely demolished. Reddit somehow is up 2.7%. Tesla 387. Tesla, I actually like that Tesla's down going into earnings tomorrow. I'd much rather have Tesla at 380 or 370 versus 420 going into earnings. So if any positive news on Tesla, that can help it. But again, Tesla, we know the auto numbers are not going to be the best. Tesla's reporting into an environment where the market's going a little risk off, at least when it comes to Nvidia. So I don't know if that's the best thing in the world for Tesla in terms of them reporting in this current environment. Quantum names are all red on the day except Rigetti and D-Wave. They're up about 2%. IO and Q is down 2%, and then QUBT is down 3.4%. Of the spec portfolio, we are all red outside of Oklo, Kohler, and Rigetti. GameStop, MicroStrategy, AMC, SoundHound, Archer Aviation, all of those are down about 5 to 10% each. Fear and greed. Let's check fear and greed. Where is fear and greed? And we'll have Jose join in like 5 minutes as well. Jose's going to join the show, give us his take on what he thinks is going on with Deepseek. Fear and greed is, I would imagine, in the fear. Yeah, 41 on the fear. We're not extreme fear yet, but we are still in fear. And that's because the whole market is not really tanking. It's more so Nvidia, which is probably why not we're in extreme fear. But this is funny because we were in extreme fear and Nvidia was like 145 3 weeks ago. So I guess the entire market is not necessarily falling here. Tesla has 130,000 pre-orders in China with the new Model Y in 17 days. Okay, so that is a rumor that is going on. We don't have confirmation on that yet. I have seen that reported by multiple sources, but again, we don't. I think Tesla's going to have to give us that confirmation. But if that's the case, that is super bullish for the new Model Y and super bullish for demand going into Q1. I mean, that is exceptional demand. But again, I wouldn't say that's completely a fact yet because the company in China hasn't confirmed that. But if it's true, very, very bullish for Tesla. Bitcoin right here holding 102, even with Nvidia getting hit. Nvidia, are we going below 115? We are on Nvidia. Let's see. On the semis, 118. No, got a little rebound on 118. So 116.25 was the bounce. 116.25 was the bounce. How do we prep for FOMC tomorrow? There's no prep. We know what Jay Powell's going to do. There's not going to be a cut. There's not going to be a raise. He's going to hopefully talk about inflation coming down in shelter and automotive prices, which are the two leading causes of inflation outside of energy. And so I think it's going to be a rather boring press conference. They're probably going to ask him about Trump, and they're going to say, Trump said interest rates should come down. What do you think? And Jay Powell's going to try to avoid the question. Like, it's not going to be that controversial tomorrow. What matters more to me is Meta earnings. And obviously Tesla and Microsoft, but Meta in particular, so that they can reaffirm CapEx guidance and put to bed any rumors that they're going to slow down on CapEx. If Meta says they are if Meta says, hey, we set up a war room yesterday and we researched Deepseek and we kind of found out we don't need to spend $65 billion. If they say that, all hell is breaking loose. Like all hell is breaking loose. And I would imagine that doesn't happen. Like the probabilities I'm putting on that are less than 10%. But there is a probability. It's just I'm not buying it. I'm not buying that. Jay Powell does not speak today. He speaks tomorrow, 2:30 p.m. We'll be live on the channel. Jay Powell speaks tomorrow. Earnings on the market close, or all the earnings for the market close are tomorrow when it comes to Microsoft, Meta, and Tesla. Today, we have Starbucks after the bell. Starbucks is the big one today. We already had Lockheed Martin, GM, Boeing, Raytheon, and JetBlue, and Royal Caribbean. But tomorrow, we see Meta, Microsoft, and Tesla. And then we have Starbucks later today. SoFi is down. Yeah, I still don't know why SoFi is down. That is weird. Meta's also giving back a ton of their gains right here at 666, but SoFi is also getting hit right here, 3.3%. Robin, it's still holding 47, dude. Still holding 47 very nicely. Again, I think the street's just pricing in earnings growth to be substantial for them. SoFi right here down 3.2%, 1555 on SoFi. Let's check Fartcoin. Another leading economic indicator that is down 10%. Okay, so some froth leaving that market as well. Okay, what's the poll? 5% bounce. 54% of you voted that Nvidia will have a 5% bounce. 46% of you voted that it will be flat or down on the day. So far, Nvidia is acting more on the flat to downside right here. Does Starbucks fall? You know, I don't know, dude. They already bounced from 70 to like 100 last year after they got the new CEO, which seemed to be the run. I think Starbucks still has some headwinds. I wouldn't count on Starbucks outperforming today. But then again, who knows? Maybe they announced something totally different in terms of their go-to-market, and that changes the street's perception. Tesla right here, 389. Crypto is still strong today. And then you got Nvidia at 118.26 currently right now. Okay, cool. We'll have Jose joining in about 2 minutes. He just texted me, so he'll be on in a little bit. We'll get his take on what's happening here. Shyam Sankar is on I think he's at the Capitol today, and he's taking some questions about AI and all that good stuff. So we'll have that footage later, and we'll see what he says. I imagine they might be asking him potentially about Deepseek. But Nvidia right here, 118.13, down 0.2%. All right, so let's get an expert onto the show, someone who knows a lot more about semiconductors than me, someone who's been in this stock for the past 5-6 years, and get his take on the madness that is happening right now on beloved Nvidia. Jose, good morning.
Good morning, man. How's it going?
Well, how's it going for you is, I think, the better question that I should be asking.
Pretty good. I mean, I don't know if it was a blessing. Yesterday I'm in vacation right now for like the past month. And yesterday I took like a vacation within a vacation. So I was away from the computer yesterday to kind of be able to absorb everything that was going on with the market yesterday.
Okay, so you've been in Nvidia stock for a long time. Give me your raw thoughts before I get into the questions on what the hell is going on. Is this one of the most dramatic declines you've seen on Nvidia? And I guess, do you think from your gut reaction, is it warranted?
I don't think it's the craziest. I mean, I feel like I've experienced some scary days with Nvidia in the past. I mean, in the semiconductor market, especially, you tend to have days where you hear about capital expenditure decreasing dramatically over inventory corrections, which kind of causes reactions like this. I don't know if it's in forms of, obviously now that my portfolio is bigger, it's probably the biggest in forms of money. I don't think it's the biggest in forms of percentage. Now, I believe the AI, two things could be true, right? So Deepseek definitely has announced some pretty cool AI innovations. It is open source, so the great thing is other big tech players can actually learn from it. But like I said, two things could be true. While innovation can be growing, the discussions of cost might not be as true as they are telling.
Okay, so let's get into Deepseek then. So I'm assuming you've seen the headlines, you read all the stories, and you did say that semiconductor stocks are very volatile because there can be certain days where the cyclicality of them becomes more mainstream in terms of CapEx going down. Do you think Deepseek is an existential threat to NVIDIA's business?
I think the answer would be yes if large language models were the end game for AI. And if you think that's the end game for AI, then this would be a scary time. But we know AI LLMs are not the only thing that is driving AI, right? We have autonomous vehicles, we have robotics, we have whatever's next that maybe we can't even think of right now. The great thing too, right, is all these big tech players, right? They have all these AI solutions. I mean, Meta Platforms has a lot of AI solutions in disposal, but they just don't release it because it's just too expensive for them to share it to their billions and billions of users. So I think what's going to happen is maybe we're going to start moving away from LLMs and start to see other aspects of AI that maybe weren't happening because they were too expensive. So I think the biggest question is, are large language models the end game for AI? If the answer is yes, then this is bad news for NVIDIA. If the answer is no, then I think there's still plenty of time for NVIDIA and the AI space.
Okay, so if large language models aren't the end game for NVIDIA, which I think all of us would agree with, self-driving, robotics, yada, yada, why the hell is the market acting like $600 billion doesn't deserve to stay in NVIDIA stock if they know that LLMs aren't the end game?
I don't know. I think the market I do believe things like this creates a lot more uncertainty, right? And the market moves on uncertainty, right? If LLMs are not the next big thing, what is, right? What is the next big thing? Where do we go from LLMs? Do those chips, are NVIDIA chips still needed for that? How long is it going to take for us to kind of get to whatever moves forward? So I think all this is creating a lot of questions, and questions end up creating a lot of volatility in the stock. So I think it's more of act now, ask question later. Once we see maybe some transformation, we might be able to go back into the stock. Now, I think this week is actually the best week for something like this to have happened, because we do have Meta earnings tomorrow. We have Tesla earnings tomorrow. We have Microsoft earnings tomorrow. So I'm actually hopeful that some of the analysts go up and say, hey, are you guys still good for your X billions of dollars? I think tomorrow is going to be a big, big day for AI investors in general, especially NVIDIA stock investors.
Do you think that Zuck's backs down from the $65 billion he committed a couple days ago?
I don't think so. I really don't think so. Like I mentioned, Meta Platforms has a nice amount of AI solutions that the consumer hasn't seen, right? You kind of seen that AI Meta assistant on WhatsApp, on Instagram, on Facebook, but they have so many more that they have kind of in use or open source, but don't really present to their consumer base because it's just too expensive to run. If he wants to, I think now he's going to have the opportunity. Hey, look, if it is a lot cheaper to run this, we can run all these cool solutions here on our Meta infrastructure and drive more consumers into their products. So I think there's going to be other use cases for that compute. It's no longer going to be just on LLMs.
So essentially, Zuck's has. So this is my interpretation. Let me know if you think I'm right. I think Zuck's is trying to be the golden child of AI, and I think he's trying to get out of the grips of Apple. And in order to do that, he needs to have a war chest of the CapEx infrastructure, GPUs, data centers, et cetera, to be able to implement his ambitions. It seems very unreasonable to me that a Chinese model that probably already had a ton of GPUs that we'll talk about in a second, and that found some creative ways to train on top of those GPUs, destroys that long-term decade vision that he has. Would you agree with that?
I agree. I mean, one of my biggest things about Deepseek is all these other big tech players have massive engineers. I come from the engineering field, right? And there's what I call 10x engineers, and 10x engineers are the guys that like their minds are insane. And I'm pretty sure these Teslas, these Metas, these Googles, these OpenAIs, they have plenty of 10x engineers, maybe even 100x engineers. So for me to think that not one of those found some form of answer like Deepseek, it's kind of wild to me.
It's hard. Yeah. I mean, like, that's why I
it's
feel
not
like
impossible, but it's definitely wild.
The story is very, very weird. Okay, so let me ask you another question. Do you believe they did this for 6 to 10 million, or do you think they had 100,000 H100s ready to go?
So I think they even they talked about it, but they kind of hit it where they only talk about certain costs for that $6 million. You don't have a lot of the pre-training, a lot of the kind of the data collection, and all that costs a lot and a lot of money. Outside of that, there have been reports that they do have that they were able to kind of get plenty of hoppers illegally, either through cloudy space.
Hold on. I didn't see that. There's reports that they got hoppers illegally. You saw those?
I mean, like from semi-analysis, Dylan Patel have talked about how they have been able to, like the AI diffusion rule, right? I don't know if we talked about this in this stream, but the AI diffusion rule, the last rule that came from the Biden administration, which kind of the main concept of that rule was to prevent Chinese players to kind of get clouding access to Hopper and all these AI chips that were kind of in a loophole. So that was the main purpose of it. So to me, for them to be doing something like that, it meant that the Chinese players were actually getting H100s and all these kind of chips one way or another. So I don't think it's impossible for one to say that these players did have access to other chips outside of the H20. They probably had the H800. They probably even had some H100. So we definitely heard talks, especially from one of the semi-analysis that I follow. Semi-analysis is semi-analysis, and he has discussed that he believes they had some Hopper on them as well. Maybe not just purely H100, but also the other Hopper platforms as well.
Okay, so you're kind of your core take from this is that you've seen CapEx headlines take down semiconductor stocks before. This is just on a new scale. Mm-hmm. Number two, you think China is a legit threat and America needs to take them seriously. And number three, if LLMs are not the end game on AGI, which I think pretty much everyone can agree, there's a bigger thesis here, then that means Nvidia is going to be more valuable in the future, given there's going to be way more demand for their chips. Is that correct?
Yeah, so that's yes. So I agree. Many things can be true, right? There could be a huge advancement in AI, but there still could be a huge need for computational power. It's not an absolute answer. Now the question here is, will Nvidia, who used to be the main player in training, be able to maintain that moat in everything else that might be moving forward? Obviously, they do have kind of a huge market in the inference space, but does the inference market create enough moat for them to be able to withstand these changes? Now, I think that's where the market uncertainty is at. I personally believe because they have this whole ecosystem created from a top level approach of being able to build systems, being able to kind of have the whole software stack, they do still have a moat in play, but now that is kind of the question. And it's also creating kind of a lot of turmoils, not just on Nvidia, right? Yesterday we saw nuclear stocks go down. We saw many even I think
what's your take on the data center infrastructures, the Vertivs, the VSTs of the world? Do you think these are like amazing buying opportunities on these names?
So I mean, I've never really purchased them. They do have that long-term tailwind, and I do believe this market is creating opportunity. If you're not going to see compute from Nvidia, you're still going to see that compute demand from somebody else, right? So these data centers are still going to be built up. So some of the stocks, I felt that yesterday, there are a lot of stocks that can actually benefit if these Deepseek issues are true or not. So if Nvidia ends up being the winner, which I still believe is going to be the winner, but if they still are the loser, companies like TSM dropped 13% yesterday, I believe. I don't know how they're doing today, but TSMC can benefit even if Nvidia doesn't benefit. VRTs and kind of these other infrastructure plays can benefit even if Nvidia, and I'm saying if, right? I'm not saying that Nvidia is not going to benefit, but even if Nvidia doesn't benefit, a lot of these players that took a hit yesterday are unwarranted, in my opinion.
So you think it's a buy the dip?
I think so. I think so. For a lot of semiconductor stocks, I mean, AI is really just in early innings right now. Obviously, large language models is definitely not the end game. But I'm pretty excited that we have at least Meta and Tesla. I think either Mark Zuckerberg or Elon Musk are going to get questions about this. And I think those are the two that are going to give us a lot of insight of what to expect in the AI space.
Do you think that the export controls will become more strict on Nvidia and that will meaningfully hurt their revenues?
No, I think the last export that we got, this AI diffusion law that came in just before the change of administration, is going to stay in place. And I don't think that's going to change too much because I think most of the loopholes were fixed through that. There's still some loopholes, but I don't think we're going to see any more impactful regulations like we saw with the AI diffusion law that came out about 2-3 weeks ago.
So then, what is your reasoning for why the street took it down this much? Like, do you think the streets? I guess my question is, do you think the fragility of this narrative is so fragile that the street is just so scared this is Cisco 2.0 and that's why they sold it off?
I mean, I think the biggest thing with the market is this AI revenue and this AI technology kind of came out of nowhere, right? So the biggest bearish thesis is if it came out of nowhere, can it really go out of nowhere? Can it just disappear like that, right?
Right.
So it's just this technology is so new that there really isn't kind of like what you would call like a base or anything to kind of ground us a little bit, right? To ground us. So everybody's saying if it came out of nowhere, I'm going to need to get out as quickly as possible before it disappears out of nowhere. And I think that's what creates a lot of this, the uncertainty of where's the baseline, right? How can you have a baseline on something that kind of came out of nowhere?
Look, it's a fair point. It's a fair point because if you think it came out of nowhere and you think it could easily leave, it definitely becomes scary, right? Mm-hmm. And that's when it comes down to the people that actually understand NVIDIA versus the people that don't in terms of, is there a moat or not?
I think the two biggest things that AI investors should watch is first earnings report this week, like I mentioned. And then the second thing is huge innovations moving forward in the AI space. They need to be moving at a rapid pace. If we kind of get a stalemate in the AI technology, I think that should be considered a yellow or red flag. I mean, OpenAI just announced, I think Sam Altman responded yesterday that they're just announcing that they're going to speed up a lot of their roadmap.
Yep.
And I think that needs to happen. OpenAI just released Operator. OpenAI is expected to release O3. So as an AI investor, not only should you be watching what these big tech players are doing, but also how these AI companies are developing. If there's no real major change or innovation happening within the next few months, then I think that should be considered a red flag or a yellow flag at least.
Okay, Jose, I want to let you go, but if you go and NVIDIA drops, because it's been going up as you've been talking.
Call me back in.
I'm going to get hit with all the blame. I just want to let you know, I'm going to be abused by my chat if you leave and this thing goes back to 117 because you stopped talking. So
yeah, I mean, this is definitely one of those stocks that you have to be bullish in the AI space. And you have to kind of sit back and ask yourself, is the AI market over? And I don't think so, man. I still don't have a robot cooking in the kitchen for me. I still don't have something doing my work for me. And I feel like the technology, if it is cheaper, we're going to see a lot more players innovate in this space. And we're going to continue to see inference demand. Right now, you have very limited amount of people using AI. I mean, my mom doesn't use AI. My dad doesn't use AI. My little brother doesn't use AI. the amounts of people that are going to start using it, if it's cheaper, could this just drive more computational needs? And will we just need more AI infrastructure because now we're expanding it truly to everybody?
And I'm assuming you believe in Javon's paradox, right?
I mean, it's definitely true. I mean, usually you see a decrease in a product, the cost of it drops dramatically, but you see the use case increase dramatically.
Yeah, because I think Nadella basically gave a sort of dog whistle to Wall Street yesterday, where he tweeted a Wikipedia link to Javon's paradox, and essentially that's him saying, "I'm still good for my 80 billion." That's how I interpreted it, because he knows that if this AI revolution is real, which, by the way, just for everyone listening, we are 30-something trillion in debt. We need growth. We have to have growth. We need some type of revolution to be happening in order for us to grow out of all this debt. So we kind of have to have something to look forward to. Nadella is basically saying, okay, if we want to keep growing and we think that one day we will have agents that book a flight for us, one day we will have robots that do our dishes, Microsoft's going to want to be involved in that entire ecosystem, which means they're going to need to spend to be able to get the benefits of it. And even if the inference training, as you say, goes down in terms of the creative strategies that are implemented to make it more efficient, you just need more raw compute. And that's where Nvidia catches a bit.
Yeah. And I mean, I think I would be more worried if it was just Deepseek versus OpenAI, but it's not just Deepseek versus OpenAI, right? You have Elon's XAI. They're also spending billions and billions of dollars. You have Google with their DeepMind spending billions and billions of dollars. So if all those guys who are geniuses, right, were wrong, then that says maybe a little bit about the market right now.
Right. Okay, and then final question. I know you answered this already, but the data center stocks, you like them, but you're not invested in them personally. So
yeah, so I definitely see a bullish case, and like I want to say that this AI efficiencies, like we talked, will drive more volume. Will kind of what you discussed with the paradox, will increase the usage of it, and will need more volume, more compute power. So while maybe the question should be, is Nvidia going to be able to control its moat? Like I mentioned, I do think that's the case. But if that's your questioning, I still believe these other players can benefit. Like, I still think you're going to need huge AI infrastructure. You might not need Nvidia chips. You're still going to need a lot of chips. So TSMC, in my opinion, should not have seen a 13% decrease yesterday. We had other players as well that even if Nvidia is the loser, all these other players, in my opinion, can still win.
Let me ask you one last question, Jose. But before I ask you that one last question, if you guys are not subscribed to What the Chip Happened, please make sure to subscribe. That is Jose's new newsletter. I get an email every other day, and I get some updates on what's going on in the semiconductor ecosystem. So, Jose, quick pitch. What's this newsletter for?
It's just a quick 5-minute read of what's happening in the AI market, a quick 3 topics, especially now with AI earnings happening. You're going to get a nice top-level overview of all the earnings for free. For example, I think Wednesday is going to be one of my favorite days to do it. We're probably going to have Microsoft, we're going to have Meta and Tesla, kind of a nice overview of what's happening in the AI and semiconductor space.
All right. So if any of you guys care about semis, please make sure to subscribe to it. It's a great newsletter. I read it every day. And it's a little thank you to Jose coming on our channel every single week. All right, so here's my last question. Does OpenAI have a moat?
Does OpenAI have a moat?
Your silence speaks volumes right now.
Yeah, I mean,
Damn, you don't... Wow, you're... Huh.
I'm trying to think how to say it. If what... I think... Oh, man. Wow, this is interesting. I just want to think it through. I think OpenAI has a lot of things that we haven't seen yet. I'm hoping they have a lot of things that we haven't seen yet. If it's just that, if it's just the stuff that we have seen, I think that moat is not as strong because a lot of other players are doing it. Deepseek are doing it. Google is doing it with DeepMind. XAI is doing it with Grok, right? So all these players are able to do it. So there's not a moat there. But I think they do have a moat maybe, and not everyone's doing things like visual. Not everyone's doing things like imaging. Not maybe everybody's doing things with robotics AI. So I think the moat that they might have is, but I don't even know if that's a moat.
It's tough, right? I'm confused with the question too. I don't think it's a definitive no, but I don't think it's a definitive yes either, right?
Yeah, I definitely don't. I mean, there's definitely a moat in the AI space right now. Not everyone can do it. So there's that moat. But within the AI space, do they have a bigger moat against all the other players? Is their biggest moat just the talent that they have? Is their biggest moat just the infrastructure partnerships that they have? Is that enough to create a moat? Is their moat the secret sauce that they might have that we haven't seen? And hopefully they might have. So that in the AI space, there's definitely that moat. OpenAI and individual moat with all these other players, I don't know if I'm smart enough to be able to answer that.
Yeah, I think over the next coming months and years, we're going to find out how valuable OpenAI is or how commoditized they might end up being.
Definitely.
All right, Jose, thank you. I will now take the abuse from the chat as Nvidia dipped and you stop talking. There's Jose's Twitter in the chat. You guys can check him out. Thank you, Jose. We'll speak to you next week.
Thank you. Appreciate it. Yep. See you next week.
Appreciate you. Bye-bye.
Bye.
All right. Yo, Nvidia better not drop because I already know what's gonna happen, dude. Nvidia better hold on to this freaking 119.20 level. Guys, I tried to buy the hood options. They didn't fill. I tried. I put in an order for the $45 calls, 2027. They did not fill. I don't want to pay extra for them. So I guess unless hood falls back down to the low 47s, I'm not going to get them. But I put it in $45 call, 2027. Probably not going to get them to fill unless we get a bit of more of a dip. Hood right here, again, incredible resilience. 48.81 up 2.24%. Shopify, what the hell happened to Shopify today? I don't know why Shopify is up 6%, but Shopify's up. Vertiv is up 1.3%. Palantir up 1.78%. Palantir doing great, basically 2%. JetBlue still getting destroyed after earnings. Tesla recovering a little bit from 386. SMCI getting hit, even though Nvidia is going green. A little bit of the opposite there. Royal Caribbean up 10% on the day. That's green. Carnival Cruise up 5.7%. That's green. So cruise lines are doing good, and the consumer seems to be rather healthy if cruise lines are doing good. Meta up 1%. Apple up 2%. Boeing's up 6%. That's wild, bro, because their earnings were not good, but they kind of told everybody the earnings would not be that good, and the street priced it in, and they moved forward. And then Google's up about 1% right here. Bitcoin at 103. That's not too bad either. Coinbase 282. And then SoFi still down about 1.18%. HIMS is up 6% today. Wow, 5.6. Yeah, HIMS. That's like new all-time highs for HIMS. 32.24. CrowdStrike is up today. That's up 5%. CrowdStrike's almost at 400. Huh. Nvidia 119.2. Nvidia's still at 119. CrowdStrike had a 100% score on a cybersecurity test. Okay, so that makes sense. That's helping CrowdStrike right there. That headline's great for Crowd. Hood 4870. Reddit up 7%. Shopify up 6%. Nvidia 119. Apple almost back to 240. And then Shopify, there has to be a headline, bro. Shopify doesn't move like this. I can't find the headline, but there has to be a headline. Also, speaking of money and e-commerce and payments, we have an official announcement from X. Linda Yaccarino, CEO of X. Visa is our first partner for the X Money account, which will debut later this year. It will allow for secure and instant funding to your X wallet via Visa Direct, connects to your debit card following P2P payments, and the option to instantly transfer funds to your bank account. So X is going for the super app, and they're going into money. They are going into money. There you go. I'm curious to see how it's going to play out if people actually transact via X, because the next logical step is for X to allow you to buy products on the app, aka take a little bit of a commission from the products. That gets you into e-commerce. That gets you into being a transmitter of commerce via finances, and that builds a financial rail, as essentially a pseudo Stripe and Shopify integrated into one app that has 500 million monthly active users. I mean, that's a big vision. Usually when apps try to do that much, they get bloated and it doesn't work out, but maybe X can find a way to figure that out and make it happen. Elon wants X to be WeChat. Exactly. Elon wants X to be WeChat. Mark, thanks for the $10 super chat. I spent $40,000 in the past 2 days between Nvidia and NVDL. Well, NVDL is pumping a little bit today after the Nvidia move. NVDL up 2.2%, which is a pump considering everything that happened yesterday. Nvidia right here, back above 120, just below 120, 119.96, 157 million shares in volume. The buyers and the sellers are fighting back and forth pretty aggressively, but they're keeping it green on the day. It's just not really moving past 120 right now. UBS raised SoFi's price target from 10.50 to 14, and then Needham raised them from 13 to 20. Let's read Needham real quick because they were pretty bullish on SoFi. JP Morgan kept them at 16, and then Citi raised Meta to 750. So they were bullish on that as well. Here is what Needham said on SoFi. This is a street high target now in the $20 range, even though SoFi slowed down on the day. They said SoFi ended fiscal year 2024 on a strong note as fourth quarter results came in above expectations due to higher net interest income and a favorable tax benefit, which is non-recurring but helps bolster capital ratios. While the results were strong, the shares pulled back 10% due to a light profitability outlook, which are expected to be bigger contributors in fiscal year 2026. In addition, we note that the company signed its largest ever loan platform deal ever with Blue Owl Capital, which is similar to KKR, which we expect to be another capital-light tailwind. We view yesterday's pullback as an opportunity for investors looking for exposure to a diversified digital lending and fintech platform. We are reiterating our buy rating and raising our price target to $20. I mean, not much you can disagree with that. Either you really hate their the EPS guidance, in which they're probably sandbagging, or you think it's pretty damn bullish that they're getting some of these larger fintech deals in regards to their loan platform. And if the tech platform can get some more of those deals, that would be exciting. Nvidia right here, 120.2. But I guess that is how investors have to think about SoFi post earnings. SoFi still not getting too much love. I mean, it's gapping back up to 16. It was down 5%. Now it's at 15.96. So a slight recovery we're seeing on SoFi. Hoodie trying to go back to 49, 48.88 right here. Palantir as well doing great, up 2.34%. Again, I think Karp on earnings is going to walk into his monologue and basically say, I told you so. And he's basically going to make the argument that it's not about the LLM, it's about the ontology. And if they just have the numbers to back up all of his bravado, which is a minimum of 30% growth, hoping for at least 32% growth, then I think the street hopefully is not going to be that upset at the SARS EPS miss if that still is a headline. So I think Karp and company are going to be pretty damn confident going into earnings, especially with everything happening right now, and reiterate their thesis that they've had, quite frankly, for the past couple of years now about LLMs versus the ontology. S&P 500, 600. Back to 600 on the S&P. Back to 600. Where's Rocket Lab? We didn't look at that all day. Rocket Lab at 30. Dude, Rocket Lab is not below where I bought it last week. And I bought it after it ran 35%, which is insanity to me. I thought out of all the stocks I bought last week, Rocket Lab would be the one that gives me a dip. And it's like, it hasn't. It just has. It's like kind of normalizing 30, like, which is kind of crazy. But Rocket Lab doing great right here at these levels. Amit, do we see Palantir breaking 100 this year? I think it's possible, but I think the healthier thing for Palantir is to consolidate and grow into this valuation. Could I see 100 happening? Sure. I mean, if they have an Nvidia type of quarter, yes, I could see that happening. But I think for them to maintain the extended multiple that they're at, and they know they have an extended multiple. I mean, Palantir knows that this stock price is much higher than what they expected years ago. They just had to grow into it. And it would be very healthy for them to consolidate in this range, grow into it. And then if it's justified for the multiple to expand because the growth is there, then I think it will. I mean, I don't think the street has a problem with expanding Palantir's multiple. Like we obviously saw last year, the street is okay with continuing to give it a multiple. It's just a question of now the growth backing up that multiple as well. I want to sell calls on Rocket Lab, but it scares me. Yeah, I agree. I still haven't sold a call on my Rocket Lab at my 100 shares. I haven't sold a call on it yet. So eventually I probably need to do that. But I don't know. Is 35 reasonable? I feel like 35 is not crazy after this run. But then again, it's showing a lot of strength. Their earnings, I think, are in late February. So we're going to see what they say. Why is Shopify up? Again, I have no idea, bro. I have no freaking idea why Shopify is up. But Shopify is up. All right, so let's buy some Nvidia. Let's buy some Nvidia. I bought 50 shares yesterday. I said I would buy 50 shares today. So let's buy some Nvidia here in the 120 range. We'll see if this thing goes back down to the 117s for the low for the day. But let's do our DCA into good old Nvidia. All right, 119.90. There you go. 119.90 on the vids of Nvidia. Price average is now 128 on Nvidia, 128.9. 128.9, 225 shares on Nvidia. So there you go. All right, let's see, bro. Let's see. We got some puts at 110. So if it gets to 110, we'll let those puts get assigned. If not, I still think this is the dumbest dip ever. But I think it's going to take CapEx guidance by Zucks and Nadella to really reaffirm that AI spend is not going anywhere. And again, I would be flabbergasted if Zuckerberg in 5 days takes away his statement for committing $65 billion. We know Nadella's not going to do that. I mean, I'd be willing to bet a lot of money Nadella's not going to do that. Like his tweet about Javon's paradox is kind of very obviously him saying, hey, we're going to need a lot more compute. And if he needs compute, Zucks doesn't want to get left behind. He is tired of being controlled by Apple. He wants to have an entire new computing device that people use outside of the phone. Like, you need a lot of AI to make that happen. A lot of data centers to make that happen. And I don't think that's going anywhere. Is Hoodie back above 49? Hoodie's back above 49. Hoodie's back above 49. Is the $65 billion over 4 years? No, the $65 billion is for 2025, which is another reason where I'm like, okay, so why does the street think Nvidia is not going to beat earnings when Zucks just said he's pledging more than 20 billion that he pledged in 2024? Like, how does the street not think Nvidia has demand? I mean, it is, I don't know. It's very confusing how they're conceptualizing it, but it does feel like CapEx guidance is something that needs to be affirmed for the street to not be too afraid of Nvidia anymore. We'll talk to Jason today on the close. I think he bought Nvidia yesterday, or he bought some of the data center plays yesterday. I think he bought VST. So we'll talk to him on Technical Tuesday and see what he was buying, but he did say, we were texting yesterday, that there were some really juicy dips and he was taking advantage of some of them. Thank you for the $5 super chat, Real Baby Pluto. Amid any reason you're buying Nvidia instead of a levered play like NVDL or NVDX, it's because NVDL or NVDX can have their net assets erode if Nvidia stays flat for a long time. So I think those are good trading instruments, but if you're going long on those products, you have to remember that if Nvidia stays at 120 for the next 5 months, which who knows at this point, right? Those assets can actually go down. They're not going to stay flat just because Nvidia stayed flat. But Nvidia, the stock, can stay flat forever as long as, they don't go bankrupt, and they'll be fine. So some of those vehicles as trading instruments, I think, are beneficial on certain binary events like earnings and selling them, selling puts, selling calls against them, etc. But if Nvidia is flat for a long time, that doesn't work. Now, granted, those have been really good trading instruments because Nvidia hasn't been flat. Nvidia's just kept going up. So a lot of people have made a lot of money off NVDL or NVDX, something that's leveraged, because the underlying continues to move. But if we get into a phase of digestion where it's kind of stagnating, that's when those assets can be a little tougher to hold. Granted, I don't think they're going to erode completely if we have a couple months of Nvidia being flat, but there is not going to be a 1-to-1 proportion between those and Nvidia. Same thing like BitX, right? I mean, this is the best example I like using when I talk about this. BitX was at this same level back when Bitcoin was at 50,000, and now it's 100,000, right? So a lot of times these levered ETFs don't necessarily move in the same way as the underlying assets that they're levered to. Mag 7s are all green. Wow, except Tesla. Holy crap. Mag 7 are all green except Tesla. Microsoft, Apple, Meta, Google, Amazon, Nvidia trying to break 121 right here. Tesla's the only one that's down 1.13%. In terms of the crypto names, everything is green except the Bitcoin miners and MicroStrategy. Robinhood 49.19 looks like it wants to get back to the 50s. CleanSpark is up a little bit, and then Coinbase is up 1.86%. Palantir 78. Palantir not stopping. We're getting a bit of a market rebound, which is nice. Overall market rebound. SoFi still down about 1.5%. But the entire market's getting a bit of a lift. TSM's up 3%. Let's go to the semiconductor names. They are all green except SMCI, which is about to recover. Intel is down 2%. AMD's a couple cents away from going green. And then Micron and Dell are still red on the day. It looks like algorithms are kicking in. S&P 500 going green as well. S&P 500 going green as well. Yeah, 601. Wow. S&P's green. S&P's green. Not bad. Not bad at all. Every time I do it, dude, every time I say not bad at all, I get conscious now. Because I know you guys are going to judge me. It used to be so natural. Now it's like freaking, I judge myself when I say it. CrowdStrike, 400. Dude, remember all the people that said CrowdStrike was dead when it went to 200? I never like deeply developed a position in the stock, but I just remember that day. I think I bought like 10 shares or whatever. And I started like arguing with these people back and forth. They're like, it's dead. I'm like, what? Like, what are you talking about? Like, what do you mean it's dead? Like, and you know, to an extent, it feels like Nvidia, right? People saying Nvidia is dead. Nvidia right here, 121. But it's like, this is one of the most important cybersecurity companies in the world. They had a mistake. It was a big mistake, but it was a mistake. It wasn't like it was criminal negligence. And it's dead to you? Like, whoever bought that CrowdStrike dip, I mean, congrats. You got it at 190, 220. I mean, the stock's at 400. CrowdStrike was the cheapest it was since IPO, the day that it fell because of the whole Y2K Delta Airlines situation. And this is the same thing with Palantir, dude. Sometimes stocks aren't cheap. Like CrowdStrike is, dude, people compare about Palantir's fucking PE. CrowdStrike's PE is 790. like Palantir's PE is at least 396, you know? Like it's one of those things where some of these things continue to be expensive forever, but on certain dips, they get exciting. Robinhood right here, 49.40, trying to get back to 50. Reddit is trying to break 200 for the first time ever. 196 on Reddit. App is flying, app loving. This thing had a big 2024. Look at that, up 7%, 364. Wow. That one's green as well. Salesforce is up 5%. Salesforce as well, dude. Benioff pumping that it's not about LLMs, it's about the data. Salesforce almost at all-time highs, up now 10% in the past 2 days on Salesforce. Incredible. Absolutely incredible. Ken said, it was awesome. I was stuck at the airport buying CrowdStrike. I think a lot of people in the next couple of years are going to have stories about where they were when they bought Nvidia after it was down 20% in a day, and they're going to be laughing on those stories. It's just hard to believe the thesis is done with. And again, we'll know for sure tomorrow. Zucks and Nadella will give us confirmation tomorrow how much the thesis is ruined based on CapEx going down. But if it's not ruined, then I think they're going to be okay. And again, street expectations are going to go lower as well. Like no one expects Nvidia to compound at 80% next year or in 2026. But if they can compound at 35 to 50%, and they can increase their gross margins or keep their gross margins the same, but still increase their compounded growth rate, then I don't know. I don't think the street gets too upset about Nvidia. Amazon, new all-time highs as well, 240. We got some in-the-money call options on Amazon that should be up on the day. Wow, all-time highs on Amazon. That's incredible, dude. That's amazing. Amazon, yeah, we are up. We're up 12% on the 190 calls. We're going to exercise these in 2026. But the reason about the calls is because it's cheaper to sell calls against them versus to buy 200 shares of Amazon. And we'll exercise these going into 2026. But look at that, 240 on Amazon, dude. Holy crap. That is a new all-time high. That, like, how can the other Max 7s be hitting all-time highs and Nvidia is down 20%, right? Like either Nvidia doesn't deserve to be down 20% or Nvidia doesn't need to control the rest of the market. Either of those scenarios are bullish. Nvidia not being one-to-one with the market anymore, bullish. And Nvidia not needing to be up 20% for Amazon to hit all-time highs, also bullish. That is not bad. Dude, I can't even finish the last two words. I can't even finish. That's not bad at all. That's not bad at all. Shopify, incredible day as well, dude. This is one I wanted to DCA into 2025, but I didn't get a chance. I didn't think about it earlier in the year. But this one, 116 as well. This is what TJ would call a sleep well at night stock. Shopify is going to be here forever. And it's expensive. It's not cheap at 18 times price of sales. But it's one of those that Shopify is not going anywhere. So Shopify here up 9% on the day. Dude, pretty much everything's green. What's red? SoFi's red. AMD's a little red. Tesla's a little red. JetBlue, that one got hammered. And then SMCI is almost green. And then General Motors and Lockheed Martin are red, both by 9%. Both of those got hit badly, I think, on guidance. But everything else is green. And then MicroStrategy is red. Everything else is pretty damn green. Nvidia 121 holding that 120 levels right now. I mean, we are definitely seeing a rotation into a lot of different things that are happening right now. Financials as well. XLF, that's the energy, or not, that's the energy. The financial ETF, that one is green. All the banks, let's take a look at those. Banks, actually, no, my bad. Banks are red today. That's why SoFi is red. That makes sense. I was wondering why the hell is SoFi red? So all the banks are going red today. They had a great day yesterday, but they are red. Oil and gas is also red. Never mind. It's a rotation back to tech. It's a rotation back to tech. Defense is slightly green. Healthcare is pretty much red outside of HIMS, which is kind of more of a growth stock than a healthcare stock to me. SAS is green. Okay, so SAS is green today. Mag 7's green today. And then crypto's kind of green today. A lot of the crypto miners are down, but Coinbase, Robinhood, CleanSpark, BitX, those are up. MicroStrategy is one of the only ones that's crypto adjacent. That's red. And then growth stocks are green. I mean, the cruise lines are green, even though cruise lines are not a growth stock, but they're acting like growth stocks. They're up 6%. And then Rocket Lab right here is up 2.2% as well. And then Palantir up 4.5%. Yeah, I mean, yesterday's dip, again, didn't make sense for Palantir outside of the fact that it's a growth stock and it's going to fall with Nvidia. But the actual fundamentals on like Nvidia, GPU, death to LLMs, yada, yada, that's not hurting Palantir. That has zero impact on Palantir. So makes sense that Palantir is doing okay. VST, the data center plays, they are green. VST is up 4%. VRT is up 2%. So Jason's got to be happy about that. I think Jason bought VST yesterday. So we'll talk more about that on the close, but that is up. And all of the Mag 7s are up really nicely. Apple freaking 4% outside of Tesla, which Tesla is about $3 away from going green on the day. February 3rd is near, correct. February 3rd is near. Energy infrastructure, let's look at next decade. This one is down 0.5%. KMI, Kinder Morgan is down 1%. ET is up a little bit. So energy infrastructure also slightly red on the day. Let me check resistance on Palantir for 80. We just blasted through 79. Let's see where 80 is for Palantir. And then we'll check 50 on Hood. For 80, Palantir resistance is 76,000 shares, not too crazy. And then for Hood, and then I'll check Nvidia. Hood for 50, it's at 49.60. Those Hood options did not fill this morning. I tried to get them, they did not fill. Hood's at 4,000 shares for 50. That's nothing. If we have the volume, Hood should be able to get to 50. And then Nvidia, we're at 120 again. 122, which we have not been able to get to, is about 105,000 shares for 122 on Nvidia. 105,000 shares to break 122. Quantum, let's check Quantum as well. I think it was slightly up on the day. Quantum is all green. All of it's green. IONQ, Rigetti, QUBT, and D-Wave. Yeah, it makes sense. We're risk on, or at least market's acting like a little bit more risk on. All right, so do we think we finish red, or we think this is like a little 1030 reverse inverse slam as we're going up? And do you think we end out the day red? Like, do we think we can hold all this green? I mean, it seems like a normal bounce, right? Yesterday was a red day. You tend to bounce after a red day, historically. Do we keep that bounce? I guess we'll see. Palantir right here, 79.05, up 4.75% right now. 30 and a wake up. Thank you for the super chat. Sitting on a cruise line in Belize, watching a mid on YouTube using Starlink while buying Rocket Lab on Hood app. I love technology. The future is now. That is so cool. That's so dope. I mean, that's the nature of technology, right? Do we really think Nvidia is going to zero when someone is using this much technology in their life? Using Hood, buying Rocket Lab, sitting on a cruise ship, using Starlink. I mean, I don't know, bro. Like, does Nvidia collapse when we are in the most amazing technological revolution of our lifetimes? I guess the broader question is, do you think Nvidia is Cisco? And I know people like to do that comparison, but Cisco did not have the type of earnings growth that Nvidia did. And at least not the projections of future earnings growth that Nvidia is having. And that comes down to a more qualitative assessment of what do you think about fiber optic cables building out the internet versus what do you think about GPUs building out AGI? And it seems like the latter is going to be significantly more capital intensive than the former, even though the internet obviously was transformational. Also, Derek bought the dip on Nvidia yesterday, if you guys were curious. So he bought the dip on Nvidia and Tesla yesterday. He told me last night. So he bought some Nvidia, bought some Tesla. Look at Kramer's recent tweet. Oh my gosh, I don't even want to do this. Please just let it not be about Palantir, bro. Please. Okay, it's not Palantir, it's the whole freaking market. I think he says we're bottoming. Of course he says we're bottoming right now. We are making our first buy in the burned out area. Check your bulletins. Watching the bottoming. I usually like to see how things are going in the afternoon. All right, well. I guess we'll see what happens in the afternoon now. I guess we'll see. Goodness gracious, bro. Goodness freaking gracious. Tesla is tomorrow. Tesla, Meta, Microsoft are tomorrow. Amit, is there a way to see who is buying Palantir? There's a way to look at the order book flow on any stock, but in terms of actually seeing, and thank you for the super chat, in terms of actually seeing who's buying Palantir, not really. You can look at the order book flow and see how many orders are coming in, but you can't literally see, is this hedge fund buying Palantir or not? In terms of Palantir's institutional ownership, though, it is still above 55%. Last time I checked, we were at like 55.0 or 55 point. We were at, round about 55.2. It's essentially 1.2 billion shares are held by the toots on Palantir. So, and look at that increase, dude. Like in 2023, it was barely 700 million. It was like barely 30%. So it is pretty dramatically gone up since then. And the toots are starting to understand more about the thesis here, which hopefully keeps the stock elevated and they don't dump off of some EPS miss that is not in their control. Walmart and the retailers are a little down today. It makes sense. They were up yesterday, so they're probably getting pulled back a little bit. But look, I like the retailers. I think Costco is a bit expensive at a 56 PE. Walmart is amazing, but it ran up 100% last year. So a lot of these names have had a good run. Target's the cheapest one, but then again, Target's cheap for a reason. Target back in the 140s. This thing was at 115 3 months ago. So this thing has had a little bit of a run as well. I do like Walmart over Target, but you could argue Target's theoretically a better deal if they can reverse their earnings from last quarter. Snowflake up 6%. Yeah, so the SaaS names are catching a bid. The SaaS names are catching a bid. Snowflake up 6%, Palantir up 5%, CRM up 5%. Datadog, I imagine, is probably up right now. Yeah, Datadog's up 7%. So market's rotating a bit into SaaS, going back into the Mag 7s. Semis are 50-50. AMD and SMC are still red, even though Nvidia's green. And overall, SaaS is good. Yeah, look at SaaS, dude. Oracle, Salesforce, Atlassian, MongoDB, ServiceNow, CrowdStrike, all of them getting some green. VIX under 17. Okay, so that's definitely giving us a bit more of an explanation about why we are green on the day. Yeah, VIX is down 5%. But see, Nvidia hasn't really substantially recovered from yesterday, but at least it's not more pain now that the VIX is taking a bit of a hit to the downside. Oh yeah, the Costco strike, that's an important thing as well. So they have a couple of days to get a deal, 3 days left to get a deal, or else we will see a strike happening for about 18,000 employees in Costco. So that's also going to be something that's very important that we have to take a look at. Okay, let's finish up with Ed Yardeni from this morning, and then we'll keep going from there and get his thoughts on everything going on right now. I'll try to see if I can get some of the footage from Shyam Sankar at Congress testifying as well, or not testifying, but like taking questions. And I'll try to see if I can get that up as well.
Maybe that increased competition will mean that you are still going to see a massive amount of CapEx spending because you can't afford to fall behind when it looks like it is such a hot foot race on this. But it could change where some of that money is spent. And I guess I still go back to the same question. The big sell-offs that we saw, not just with Nvidia, but with Broadcom, with a bunch of the energy companies that were down by more than 20%, whether it's Constellation or GE Vernova. Are those buying opportunities to you when you see this? Or were those stocks that were I think, as you said it, this bubble, speculative bubble type of territory. How do you measure it?
Well, some of the monopoly valuation multiple has been kind of re-rated, right? It's come down some, but I think these are still amazing companies that are going to continue to have quite a bit of demand for their products. If anything, this makes AI more accessible. Means it'll proliferate faster. And we're still going to need the data centers. We're still going to need the energy. So I don't think the story fundamentally changes. It just becomes more competitive. Maybe there's some pressure on Nvidia's margins, but that's been adjusted for basically in one day. And I think from here on, these stocks and the overall market will be driven by earnings. And I think more and more of those earnings are going to be associated with a rising profit margin thanks to AI and other technologies. AI is not the only game in town. There's automation and robotics. And by the way, all these technologies interact. So look, Becky, I think we're in a digital revolution. I think we've been there since the IBM mainframe in the 1950s. And the digital revolution just continues to roll on here. We are processing more and more data, more and more, faster and faster and cheaper. And that's what it's all about.
Yeah, and I think that's a valid reflection and way of looking at things. We saw a big sell-off yesterday in the NASDAQ, but it was only the worst day we've had since December 18th. So this is not...
Put it in perspective.
Yeah. And by the way...
So I think that's fair. Same thesis a lot of us have been talking about. It's hard to imagine this tech revolution ends simply because of, a Chinese model creating certain headlines that is, yes, accurate to an extent in terms of how we should think of compute, but not the deal breaker on the idea of compute going away. Fear and greed almost at neutral. Wow. Okay. So we're getting a little bit out of greed. Yeah, it's almost at neutral right here. Nvidia has been re-rated. Nvidia is going to have to make its run in a different way. Either it's going to happen slowly, either it's going to happen suddenly. It might be a gap up one day after the market hears Zuckerberg talk about AI. It could be anything random that brings Nvidia back to life. But the good thing is it's not getting hit worse than 116 that it was yesterday. Yeah, I also believe it didn't cost $6 million. Some of the training might have cost 6 to 10 million, but the actual chips they bought had to be closer to 2 to 3 billion if you assume 50,000 H100s, which, like, that should be the real headline, right? That they still spent a ton of money on those chips because you can't just train it off of a CPU. You needed an actual GPU, which is something NVIDIA has theoretically a monopoly on. So although the inference training was creatively cheaper, or was creative, therefore it became cheaper, the chips were still needed. I think the biggest fear of the market is, like, are these efficiencies going to become so massive that the actual raw level of chips you need goes down? And I think that's still a question. And if you ask some of the leaders like Sam Altman or Nadella yesterday, they're thinking, no, we're going to need a lot more of them. But the market doesn't believe that yet. They don't believe that yet. And until they believe that, we're not going to know how this plays out. Yeah, Tess is right about this. The open source shows you they use 75% GPUs. That is correct. If you go through their white paper thing that they put out about this as well. Okay, let's get another update on Nvidia, and then we'll keep going from there.
Productive that you can make some mistakes.
At this hour, the stock is now trading about 43% below the average price target on Wall Street. A number, of course, analysts weighing in this morning on the direction of Nvidia going forward. Morgan Stanley actually cutting their price target from $166 to $152, citing possible further export controls, while Mizuho's Jordan Klein calls Nvidia's move, quote, overreaction. Two things will act as catalysts for the semi-trade going forward. One is how Microsoft and Meta justify their AI budgets to shareholders in light of Deepseek's lower cost model, and any update from Washington and President Trump's plans to tariff or add restrictions on chip sales. We spoke to Atlantic Council's Mark Christopher, who highlights a few options that they have, including expanding the entity list of Chinese firms banned in the U.S. and denying Chinese companies access to U.S. cloud providers like Amazon, which developers there use to rent NVIDIA GPUs. Evercore ISI adds that NVIDIA and AMD had been hoping that Trump would soften the Biden administration's new licensing requirements that require to sell to over 100 countries. That does go into effect in April. But they add that this whole Deepseek revelation might add a new complication to those efforts. So the focus very much not just on AI budgets, but again, what Washington can do here.
Let's get some more analysis on this as well.
This week. Kay, thanks. Talk soon. Kay Rooney this morning. Let's continue with the AI arms race discussion. Our next guest strongly believes that OpenAI may become the WeWork of AI. Gary Marcus, New York University professor.
Wow. The WeWork of AI. That's a hell of an argument. WeWork, for those that don't know, went from 46 billion to 0. So interested to hear what this take is.
An AI expert joins us this morning. Gary, welcome back. It's good to see you again.
Yeah, great to be back.
I don't think you mean WeWork as a compliment.
Well, I mean, not really. No, I don't. I think that OpenAI is highly overvalued. I think we just saw their business model sort of blow up yesterday or over the last few days with DeepSeek basically giving away for free what they wanted to charge money for. Also, I think that DeepSeek is more open than OpenAI, and that's going to be attractive to talent. I don't think things are looking great. I think $157 billion valuation is hard to bear out when you're losing $5 billion a year or thereabouts. And I think the final problem is that this software, large language models, just isn't that reliable. We all know by now that it hallucinates, makes stuff up, makes weird errors and so forth. And that's a problem. So somebody, could be OpenAI, could be somebody else, will eventually, I think of something that is much more useful than LLMs. But I don't think that's going to happen tomorrow. And in the meantime, OpenAI is burning money. And so we may see their valuation plummet in the same way that we saw with WeWork.
Do you trust everything you've heard from DeepSeek? And I just wonder, how can we make any kind of broad conclusion this early, and given the secrecy and doubt that these details are enshrouded in right now?
I think it's pretty likely that at least roughly what they described is correct. I read the main paper on R1. It makes sense. I've heard that someone at Berkeley has already replicated it. And if the company just made it all up, then they're going to flame out very quickly, because everybody knows how to replicate. They described enough about what it is. And so we'll find out in a matter of weeks if it's not true. But I think it probably is true. I think what they did is plausible. They worked harder on the optimization than other people had before. It's not entirely surprising this would happen. You know, a year ago, I made a bunch of predictions, and one was that this stuff would all become a commodity, that there was no moat. And we all knew that there were gains of efficiency to be made. I think they did it in super impressive fashion, but I think it's probably legit.
I'm curious your thoughts on what this means for geopolitics, because the conventional thinking for the last few years has been that the U.S. has kind of unbridled resources to put forth toward becoming competitive in AI. And if there's anything we've learned this week, it's that this can potentially be done more cheaply, more commoditized, as you say. So what does that mean for the democratization of this technology across the world? And, you know, taking it one step further, what are the geopolitical implications of this if, you know, basically with a couple $100,000 or so, you can just replicate this technology?
So I think that what this really shows is that AI is once again anybody's game, but also that nobody is going to win by playing with LLMs. LLMs are large language models are too well understood. That's the core of generative AI. Everybody's kind of playing the same game. And so it's impossible to get a big lead on that. And now even smaller countries or smaller companies are going to be able to play because of these new results. If somebody really wants to get an upper hand here, they're going to have to invent something fundamentally new, something that I think works differently from LLMs. You know, getting to general AI, artificial general intelligence, probably requires like 5 or 6 more breakthroughs. And the company or country that can ramp up those breakthroughs first may win, but just playing around with LLMs is not really going to get us there. In fact, people have struggled to make GPT-5. If somebody does figure it out, probably other people will be fast followers. This is just not a way to get an enduring lead. It also shows that the CHIPS Act, that the export controls are not really a way of controlling this. What we really need is to sponsor innovation, sponsoring the right kind of innovation, getting people to look outside the black box to new approaches. That's what's really going to make a difference here.
Okay, so this guy seems a little bit more bearish on the concept of LLMs in general, but he is also bearish on OpenAI having a moat. I would say, you know, LLMs are actually very useful, and we're going to get a lot better LLMs in the future. So there's a little bit of disagreement there, but it's more so a question of, does it matter who builds them as long as they get built, right? And is it open source versus is it closed source? And I think eventually that's what we're gonna have to figure out. Yeah, I've never heard of this guy. Do you guys know this guy? I've never seen this guy before. I kind of got the sense he doesn't like LLMs. I'm like, hold on. Like, I'm listening to him like, hold on. Maybe OpenAI is commoditized, but LLMs are useful, dude. Like, they're not like, I use them every day. They're very important. I can imagine they're only going to get more important. I think the reason people are skeptical of LLMs is because like our friends and family outside of like us that have been using LLMs every day, and because we experiment with this technology, most of like my mom, my dad, they're not using an LLM, but they're using Google search. Eventually, when they start using an LLM, that's when shit gets crazy. That's when it becomes a lot more exciting when it comes to what we're thinking about in this broader AI revolution. He was tweeting about suing Zuck and Meta for open sourcing Llama. Yo, who is this guy, dude? I started listening to him because CNBC said he's some important professor on AI. And then you hear he doesn't like freaking, he doesn't even like LLMs, bro. All right, Kris, I'm calling you right now. Let's get Kris on the show. CNBC, bro, some of the guests they get are just weird, bro. Sometimes you think it's a good guess and then it says some weird shit. But regardless, his argument about commoditization of LLMs, I think, is correct, even if the broader argument around LLMs being not useful is not correct. Kris, what's up? Good morning.
Good morning, dude. Today is a very, very interesting day. And I think what Satya and some of the other guys, what they were saying about more compute is actually playing out right in front of us.
Okay. What's your take? What do you think?
Okay, so you see all the software names running right now, right? So like CrowdStrike, Palantir, even Snowflake is up. Everyone is up right now. Well, the reason why I think all the software names are running right now is because, okay, imagine right now you're a software developer, right? And like I said yesterday, you have to create products that you can sell to people. Now, if the cost that you are basically passing on to them, 70-80% of that cost is literally just going towards AI related compute, then the amount of money that you can charge is going to be, it's going to have to be really high. So now, because like the price of like the AI portion has gone down so much, quote unquote, because of this new technology, you can actually sell more software wider. So you're casting a much wider net. So these guys, all like, dude, every one of these software companies now is going to be integrating some level of AI into their products,
And so that should expand demand is what you're saying.
Yeah. Oh yeah. It's going to expand demand by a lot. It just depends on who the main beneficiaries are. In my opinion, is probably going to be the cloud providers. And the cloud providers eventually are going to have to buy more GPUs, right? So it's kind of like the ecosystem feeding the ecosystem. So, the whole thing with Jevons paradox is actually playing out right in front of us as all of these software names are running.
Okay, so then what's your take on Nvidia back below 120? I mean, do you think the market's not buying this whole Jevons paradox thing, at least not yet?
Well, the thing is, what the market is forecasting is that the growth in the hardware spend was already going to be like super high. So maybe there's going to be a cutback, or at least like the growth in the hardware spend will slow down until this compute part catches up to demand. So the thing is, like, let's say this year Nvidia stays flat. Let's just say Nvidia's demand stays flat. What ends up happening is now next year, all the companies that are developing even more software and have more licenses that go out, they're going to actually like put that into the CapEx cycle now. So if you think about it, it's almost like more compute equals more hardware requirements equals more compute equals more hardware requirements, right? So that's what's happening in the background. So could this mean that Nvidia's like growth is sustainable instead of it just being a cyclical business? That's a real good question that everyone should be asking, right? As much as everyone loves Nvidia, you got to remember, like, there is some cyclicality to the hardware spaces. So if there is somehow a way where the never-ending compute gets factored into the hardware part because of like a moat that Nvidia has, it means that Nvidia could do well into the future.
So your pound the table is the hyperscalers right now. That's what you're buying.
Yeah. I think the hyperscalers are definitely the place to be. Like Amazon right now is just rocketing higher. I think Google is eventually going to do their part and recover. They're going to definitely speak about this on their earnings report. And what's going to be a telling sign is their cloud operating income segment, which has been growing significantly, but actually could do even better. Apple is benefiting right now because if you think about it, the cost of doing AI on its phones is probably going to get cheaper because so I mean, right now Apple's AI, quote unquote, if you want to call it that, is like non-existent, if that. So if you're able to reduce down the cost, that ends up being, amazing. So yeah.
So do you think SMCI then recovers off this Javon's paradox thing as well?
Technically, it should, because you're gonna need hardware to support the GPUs, right? The one thing about SMCI compared to, like, let's say Dell and HPE is that because of this whole thing with their fraud and Hindenburg, the short report, valuation on SMCI is just like bottomed out. Like right now, it's like $16 billion in market cap. But if you think about how much money they're projected to generate on an EBITDA basis, it's pretty high. Which means that, like, this is why yesterday when we were talking on like the group call, I was like, bro, I'd be very shocked if these guys don't issue like 2, 3, maybe even a 5 billion, like after their earnings, they don't issue like $3 to $5 billion in debt and start buying back shares.
Right.
Right. Because the amount of EBITDA these guys are going to be generating into the future is actually pretty good. And if you think about it, the share value is really low. So I think SMCI can recover just because it's at such a low point compared to like the demand of the actual products themselves. Like, I'm not super bullish on hardware when it comes to like non-GPU related hardware, but I think the value is so deep that it's like a big discount, that you're getting a really big discount,
Okay, so a week ago, we talked about there's an auto credit crisis in the United States that's boiling up, and we can see that in delinquency rates. Why is GM down 10% in your opinion today?
Well, GM, according to them, their China numbers weren't very strong, and that's what's causing them to weaken. Bro, I think we got a problem in autos. Like, no matter how I look at this, demand for autos is coming down. There's a lot of inventory out there. Used cars are going up, like in terms of inventory, and we could see a massive level of disinflation in this thing. Like Ford is down 3.5% today. And even with everything running, Tesla's down 1.8%. Now, I know I'm going to get the criticism in the call. No, Tesla's not an automaker. Tesla's a technology company. But dude, if you're 70, 80% of your revenues is coming from auto, you are an automaker. Maybe one day you won't be an automaker, but you're going to be valued closer to an automaker. So I think this is something to definitely be careful of and watch out for in the next like 6 to 12 months, because you've already seen Tesla's growth rate flatline. And if let's say right now you start getting reductions in like actual revenues decreasing, Tesla could reprice to a much lower level. Not to say that it's going to happen right away, but it's something to just be aware of. You got like literally a $1.2 trillion market cap company in a field that seems to be on a downward trajectory, at least in the short term. So, yeah.
What do you think Jay Powell says tomorrow? Any surprises, or it's going to be a boring meeting?
Nah, he's just going to, like, you called it right. It's basically going to be a combination of like, where do you see interest rates headed? What can we expect? The president has said that he wants to lower interest rates. What are you going to do? And he's just going to have to like thread the needle very carefully. He's like, look, the Fed is an independent, body. We're going to do things based on the data that we get. And that's it, and he's going to have to be just very politically correct with how he approaches the whole thing. So, yeah.
All right. Last question for you, Kris. I know you're going to go on a little victory lap here, so I left it for the end, but cruises, baby.
Yeah.
We got the consumers going out on cruises. 12%. A, is this good for the broader economy? B, are you going to take some profits on this pump?
Nah, man. I told you the cruise lines are in a secular like upward movement. So if you look at it, the key for cruise lines, especially like CCL and NCLH, they were more based on just math. like I broke it down very, very mathematically to say, look, their biggest challenge has been their debt and the shares that they had issued during COVID. But all of those issues have pretty much been resolved, and demand is back to normal again. So the thing is, these businesses are actually very, very profitable, and the unit economics for them as they get bigger actually becomes cheaper. So right now they're in a really good place, and there's still a lot of pent up demand. They've got the baby boomer demographic that absolutely loves going on cruises, that are flush with cash. They're spending money and they're going on cruises. They're going to go see the world. The other value proposition of going on a cruise versus something like, physically traveling to another country. I mean, like back in the day, you could actually go to Europe and enjoy it. Right now, you go to certain parts of Europe, it's like migrant after migrant, like crisis, in certain areas. So people are like sticking to certain non-traditional travel. And so their cruise lines have a nice 5 to 10 year move higher. And especially if they start buying back shares, which should happen for Carnival and Norwegian within probably the next 2 to 3 years. Like you already see Royal Caribbean buying back shares, and they're profitable as hell. So there's a lot of secular tailwinds behind the cruises. NCLH and especially Carnival. Carnival is cutting back on its CapEx a lot, and they're generating almost like 5 to 6 billion in operating cash flow that they can use to pay down debt, which once again raises your equity value. So none of this stuff is like super complicated. It was just a matter of, hey, how can this impact their debt levels? Because I think that's one of the reasons why their share prices have actually been sort of depressed. So my thing right now with Carnival especially is, like today, they just announced a giant refinancing deal where they had debt that was double-digit debt, like 10 point something % interest rate. They actually were able to, because now they're in a much better place in terms of cash flow, they're able to reduce down that interest rate, which means that's pure profit going back to the bottom line. If you're able to reduce a 10 point something % interest rate to, like, let's say 7, that means you're saving 400 basis points. And now if you multiply that out by, let's say, $3 billion, which is what, roughly it was around, you just got yourself a ton of that income. And you didn't do anything but just move,
money
refinance.
around.
Yeah. And so even in the future, when interest rates become cheaper, like they go down, these guys are going to refinance more of their debt lower. So a lot of businesses that have capital intensive, like business structures where you have to put in a lot of money upfront for capital, they've basically taken a giant hit because of the higher interest rates. But as interest rates come down, that's like a giant tailwind for them. And there's plenty of companies that are out there that are like that. So they're what I would like to just consider like a hedge against a recession, especially like if you're in something like telecommunications. Like Verizon was one of them. Like if you saw Verizon was up yesterday. Why? Because the 10-year was down, which meant, future CapEx, or not CapEx, but future interest rate refinancing for some of these companies will become cheaper, which means that falls right back to the bottom line again. Right. So a lot of this is just going through the math and then figuring out, okay, who benefits the most from interest rate changes, and also like what part of the consumer segment are they in that would they benefit from? So like I've always been saying with something like Verizon, are you going to cancel your cell phone plan if you lose your job? No. If anything, you're probably going to go up a little bit because now you're going to be making more calls. I mean, I don't know, but these are the kinds of plays that I think we should all be aware of and hedge for next year. Right now, I think there is a rotation happening a little bit from like big tech, which the valuations are super high but still growing. And some people are like, well, maybe I should diversify a little bit into some safety stocks as well.
Okay, so last 3 questions for you, just a simple pump or dump. Meta tomorrow, pump or dump after earnings?
I think it pumps.
Okay.
Meta, dude, Meta is like one of the easiest winners in this market. They've been leading the charge on open source, and now you're starting to see that open source is going to end up winning. Closed sources where they're spending all this money and they're not really developing like as fast. Dude, Zuck is just, I don't know. Zuck is a fucking ruthless killer. I would not ever bet against Zuck.
Okay. Tesla, pump or dump tomorrow?
I'm gonna say neutral. I don't know.
No, you got to pick. Yeah, this is the fun part of the game. You got to pick.
Tesla's a hard one because
we know it's hard, but you got to pick pump or dump.
I'm gonna say dump.
Okay.
I'm gonna say dump.
And then Microsoft, pump or dump.
I think Microsoft pumps. Microsoft is gonna highlight that their demand for services is just going through the roof, and Azure hopefully like backs that up. So, that's one thing. The reason why I'm saying for Tesla a dump is only because I don't know what kind of forward guidance they're going to be able to give. Does Tesla even do forward guidance?
Well, Elon did say they're going to do 20 to 30% vehicle delivery growth on the last quarter, but I don't think anyone believes him. If he's going to have to reaffirm that, right?
Yeah.
Because, dude, they did 0% growth last year. So for them to do 20 to 30% vehicle growth with the EV tax credit going away, it's just
not only that, but this, I don't know about you, but doesn't it feel like EVs are getting a little bit like they're a little bit out of flavor right now?
I mean, well, we don't have to speculate on that. Tesla told us that hybrids are getting more value or more popular. They told us in the last earnings, right?
Yeah.
But I think that $7,500 tax rate is definitely going to, like, I would not have bought my Tesla if I didn't have that. So
yeah,
I would imagine there's going to be other people that just don't buy it,
Yeah, I wonder maybe their numbers will actually grow because of this whole thing with EV tax credits likely to expire. Because remember, when did Trump say that? Trump said that before the end of the year, which meant that a lot of people might have locked in their purchases at the time. So new cars might have gone up that quarter, but like I said, it just depends on what kind of guidance we have next year, especially if the EV tax credit goes away. Not to say that that's the only thing. Because then if you think about it, if the EV tax credit goes away for everybody, that means that Tesla would technically be the only profitable EV maker, which means that all the other car companies would probably offer less EVs, in which case it would solidify somewhat of a moat. I don't know. Business is complicated with this, but all I can say is that I think the consumer is definitely not in the market to buy a lot of cars next year. And eventually that sentiment is going to make its way into the Tesla segment. And especially right now with used Teslas, they're losing value really, really fast. Yeah. Like, hell, I was telling my wife, I was like, I'm probably going to just buy a used Tesla, in the next 6 months.
Yeah.
So, yep.
All right, Kris, thank you for joining. We'll talk to you tomorrow after earnings. Your Twitter is in the chat. We will see you later.
All right. Later, dude.
Later. Thank you. Bye-bye. All right, markets are still kind of green, kind of red. Nvidia flatlining around this 120. It's not going too much below, not going too much above 121.3. Did you guys buy the dip? Did anyone buy something? You can put it in the chat if you bought any dips today. Not really too many dips, but if you just bought any stocks in general. Apple's up a whopping 4%. Amazon all-time highs, incredible. Google's up 2%. And then Palantir trying to make its way back to 80. But Nvidia right here not heading back below 120 as easily. We got a bunch of Nvidias in the chat. Bought Nvidia, sold Tesla. Interesting. Bought some Nubank calls. Nvidia, Palantir. I bought SoFi and Nvidia and Cheesecake. Dude, this company, Cheesecake Factory. I love eating there. I haven't ate there in a long time, but this thing, it has to be up like how much year to date? Every day it's up. It's up 10% year to date, dude. That's a big move for Cheesecake. It doesn't move like that. That's a big move. We got Snapchat up 1%. I do have a swing trade going on Snapchat, 500 shares. We got some people buying Meta. Spotify has a new licensing deal with UMG, so they're doing great. Look at that, Spotify. When did they get over 500? I haven't seen that. Wow. Spotify absolutely crushing it, 3%. This thing was $70 back in 2022. Basically pulled a Meta, 70 to 500. Meta went from 80 to 600, but pretty amazing on Spotify. I got Spotify wrong. I always thought Spotify was not going to be able to get their gross margins to be profitable because the record labels were sucking so much out of them in terms of streams and like raw cents per stream. But Spotify figured out how to leverage their network effects to get a better deal with the labels, and kind of similar to Netflix. They were able to figure it out, even though a lot of people didn't believe they had the unit economics to make it happen. Nathaniel bought some AMD and Nvidia. Michael's swinging ELF, which I don't hate that because ELF is getting hit badly. Where's Nike today? Where's Nike? Nike is flat on the day. Some people bought some net, D-Wave, some quantum stuff. Sirius XM, this one, Warren Buffett stock, not really moving too crazy. It's up a little bit today. And we got some more Nvidias. All right, so we got people buying the dip in different areas. Not really a dip today, but buying. SMCI right here, 28.53. That's down 1.86%. Royal Caribbean still up 12%. Amazon up 2% on the day. Oh boy. Oh boy. Oh boy. Oh boy. Not too crazy. Not too crazy of a day. I mean, I think everyone is able to relax a little bit now that Nvidia is stabilizing, but who knows, dude? We still have a lot of hours left in the day. It just feels a little bit better than yesterday as you have buyers stepping in on this name. 121, and it's holding it nicely. It hit 116 for like about 2 minutes, and then it rebounded pretty quick off that, and now it's been kind of stuck in the 120s, which is not bad at all. X and Visa, yeah. So again, we talked about that. I think it's cool. X and Visa. John, thanks for the $5 super chat. But I'm skeptical of X being able to build a super app. I think super apps in Asia and other parts of the world work. I think in America, people don't really want everything on one app. That's just like what I've seen from personal experiences. I feel like if we were going to have a super app, it would have happened by now. And it hasn't happened. Now, can X reverse that trend? Maybe. But the reason I'm skeptical is because X is still not as popular as Instagram and TikTok. So you need to have a lot of users to make a super app work. And X has users, but they don't have as many as the other platforms. And Instagram tried doing shopping before. Didn't work. Instagram tried doing payments before. Didn't work. TikTok shopping is decent, but it's not like it's, dethroning Shopify or anything. So I don't know. I don't know what it's going to look like. I don't know if people are actually going to send money to each other on X. But we're going to see. It's definitely not a bad thing for them to try and implement that as a new revenue stream. It is not my birthday, but people randomly say it's my birthday, but it's not my birthday. I appreciate the wishes though. What else? Let me see what other headlines we have going on right now. RFK Jr. vows to remove financial conflicts from health agencies. RFK Jr. acknowledges the essential role vaccines play in healthcare. He emphasizes that he is not anti-vaccine or anti-industry, but is focused on addressing and eliminating financial conflicts within health agencies. Okay. He still hasn't been confirmed yet. Pete Hegseth got confirmed over the weekend, but other parts of Trump's admin need to be confirmed. Nvidia short sellers made $6.7 billion in paper profits yesterday. That is the headline from Ortex, which is a firm that tracks this stuff. $7 billion in profits on Nvidia shorts. I imagine some of those are from China, potentially. X got rid of a lot of bots. Meta and Insta definitely haven't. Well, I'll tell you right now, I'm on X all day, and they have not got rid of a lot of bots. I mean, maybe they got rid of some bots, but the amount of bots on X are still insane, dude. And YouTube, dude. I hate that you guys, when you scroll to the comments of my videos, you see everyone pumping this stupid fake crypto coin. I don't know what to do about it, dude. Like over the past week, I've been manually deleting the comments. I sit there for 10 minutes and I delete it because I know how annoying it is to want to read the comments on a video, and then you have all this trash you have to go through. But I can't do that for every single video. Like I just don't have the time in the day to literally delete every single comment. So YouTube and X have not really solved that issue. And it's insane because it's like, it's YouTube. Like they have 6,000 employees. You tell me they can't filter for bots? Like how can you not do that? It's insanity that Google doesn't have the resources to figure that out. And part of my conspiracy is they want people to comment because then it keeps people engaged, because there's going to be a lot of people that fall for the comments and they're going to spend more time on YouTube reading the comments, even if the comments are fake. But like, that's not good, bro. That's not the right way to build this stuff. So I don't know. XAI 1051 is going to the moon. See, like that's, this has been going on for 5 years, bro. This is not a new thing. It's been going on for 5 freaking years. And the fact that it's not resolved yet is wild. Okay, we got Kathy on Bloomberg. Let's get an update from her, her take on Deepseek. Haven't heard from her in a while. She did sell some stocks yesterday. Kathy bought AMD, she bought Qualcomm, she bought Amazon, and she bought Salesforce. She sold Nubank, Palantir, Rocket Lab, and Tesla. Let's hear from Kathy here today.
Yes, as the cost of innovation is collapsing, which it has been doing. I mean, the cost of AI training is dropping before this, 75% per year. The cost for inference, 85 to 90%. I think it throws the weight more towards inference chips from training chips. And so Nvidia is highly exalted, and deservedly so, in the training chip space. Inference is a lot more competitive.
Okay, do we fully understand the implications of that? Because the question that everybody's asking this morning is, do I buy the dip? So if we're seeing the landscape changing, is it too early to make that transition and understand what the implications of it are?
Yes, we've been studying the tech stack and where we think it's going. We're going to put out big ideas in, I think, a week.
Give us some hints.
Yes, so here's a hint. We do think there are share shifts taking place within the tech stack. We think platform as a service, so think Palantir, is going to gain significant share. And this news yesterday, I think, highlights that, reinforces that. We think infrastructure as a service is going to stabilize the share. Software as a service will come down a share. However, I've said all of that. All of them will be growing rapidly. It's just how rapid.
Okay. And Palantir, we should say, is one of your holdings, of course, a company you know very well, Kathy. So if inference is going to become cheaper, is this going to be a situation that drives more demand? We were talking about, is that where the positivity comes from? For the companies that don't train but do infer,
yes.
How positive is this going to be?
It's going to be extremely positive. So those using AI, whether for productivity or other applications, are going to benefit. We think the two most profound use cases right now, besides increasing productivity for everyone, autonomous mobility, so think cars, drones, and so forth. And interestingly, the healthcare space. We think the convergence of various sequencing technologies, AI, and CRISPR gene editing, that convergence is going to cure more and more diseases over time.
So these sound like huge positives for the businesses that are involved in that stream. What does it tell us about US tech overall? We had a conversation yesterday about whether this is some kind of end of US exceptionalism, and that might be in terms of stocks broadly, but in terms of the US tech sector, are we talking about that? Or is this just, the Sputnik moment that's been mentioned many times, a chance for the US now to catch up again?
Yes, I think competition is great for the US, and Deepseek is competition, no doubt about it. I'm hearing all of the titans, tech titans, speak of it glowingly. I don't think we know everything about it yet. So, no, I think it's competition is good for the United States. Lowering costs is great for the world. The collapse in the cost of innovation should help all regions of the world. I will say that new productive forces, which was Xi Jinping's new phrase, I think 18 months ago, seems to be showing through right now. Common prosperity was the previous one, and I still think that's in effect. That was more about margins. This is about innovation. So we're looking more closely at China now.
And by the way, Xi Jinping needs to have something other than just margin expansion. They need to have growth. And so it makes sense that their mantra is now new productive forces, because if they don't have growth, China's screwed. Like, China's economy is not in the best situation right now. All the stimulus in the world doesn't help if they don't have growth. So you would imagine China's happy about Deepseek because it's putting China's AI ambitions on a global stage. But nonetheless, it can't just be a copycat of OpenAI. Like, there actually has to be real innovation. And we have yet to see that from China so far. I mean, Deepseek is a type of innovation, but it's not, I think, anything near the AI innovations we've seen in the United States. Now, one thing about Kathy that's important as well, she is bearish Nvidia. Kathy sold out of all over Nvidia a while ago. Now, granted, she bought the stock when it was $5 in 2014, so she wrote it up really nicely. She missed another, I think, like 20x in the stock, even though she already made 20x. So it could have been a really big winner. But her thesis has always been that the software applications of Nvidia are going to be the biggest beneficiary. And I mean, that thesis is not wrong. It's just we need so much hardware, or we needed so much more hardware back in 2022 when she started selling it, that I think are kind of mistimed just how much demand Nvidia would get, because Nvidia, ended up showing up the growth. They ended up getting a ton of demand, and it looks like the demand is not necessarily going away anytime soon. So I think Kathy will be right on that thesis, but it doesn't mean Nvidia necessarily has to fall for Kathy to be correct. Here's a cool picture from Arnie. Speaking of software platforms getting most of the value. So Fundstrat, Tom Lee, actually put Arnie's tweet into his Fundstrat update yesterday, which is super awesome. So shout out to Arnie. Arnie tweeted a quote from Shyam Sankar: AI models are converging, all while pricing for inference is dropping like a rock. The value is in the application and workflow layer where we excel. He said that in the November 2024 earnings call, and Tom Lee posted it in his FS 1 minute update. So super cool. Cool stuff for Arnie. And it's nice also because Tom Lee's also kind of implicating the idea that software is what matters, and that software is probably not going away anytime soon. By the way, here's Shyam talking about it. Here's 25 seconds of him kind of calling out what probably would happen with what we saw with Deepseek.
The market has been focused on AI supply, the models. We see this clearly in the progress, but also in the capital sunk into these models. Indeed, the models continue to improve, but more importantly, the models across both open and closed source are becoming more similar. They are converging, all while pricing for inference is dropping like a rock. This only strengthens our conviction that the value is in the application and workflow layer, which is where we excel. Market is—
Dude, doesn't he sound like a psychic there? Like it literally sounds like a psychic. And it's just like, it's a prophetic is the better word, right? Sounds prophetic that the value is in the application. And they've been talking about this since 2023. In those early days when they launched AIP, this was the take by Shyam and Karp, which is that it's not about the LLM, it's about the ontology. And I think they are being proven correct today. Again, that doesn't mean bearish NVIDIA. It more so means bearish Anthropic and OpenAI, because those models will be open sourced and created as well. Rocket Lab is getting a bit of a dip. Rocket Lab is down 4%, 2805 on Rocket Lab, 2805, 4.7%. I don't think there's a headline here on Rocket Lab, or I don't see a headline. Might just be a normal retracement after last week's pump. Nubank down a little bit, or up a little bit. Spotify up 3%. Nvidia still holding 121. Nvidia not getting hit yet. It sounds like he literally has a Palantir. Yes, exactly. All the space stocks are down. Is there a headline on space? ASTS down 2%. Lunar is down 4%. Okay, so it has to be a space headline causing this. Do you have any clips from him talking in front of Congress this morning? I don't. I haven't found those yet. They'll probably be posted on Twitter in a few hours, but it wasn't on YouTube, so I don't have the clips of Shyam speaking yet, and no one has them, which is why they're not on Twitter yet. Probably on the market close, we'll get more of those clips. SoFi is just not moving. Yes, SoFi continues to be stuck at 1550. Again, dude, EPS guidance just wasn't good enough for the street, which I still think SoFi is going to be well beyond 20 later this year, but it's going to take a couple more quarters of growth and for them to beat and raise again and again for them to get there. Where's Hood? Where's Hoodie? Hood is 48.63. So even Hood taking a little bit of a retracement from 49.60 back down to 48.60. Yeah, the 11.30 dip versus the 10.30 dip. Did you hear Kathy Wood say Palantir will be the main beneficiary of DeepSeek? Yes, because DeepSeek only reaffirms her thesis that the cost of inferencing is going to go down. And so that benefits the application layers, aka Palantir. Which again, dude, we've talked about this for a couple of months now, but I know people hate the valuation on Palantir. I get it, it's extended. But if all the AI value, the multi-trillions of dollars of enterprise ROI is in the application layer and it's not in the LLM, you would imagine the market pays a premium for that. And that's why Palantir is able to hold these levels. And I think a lot of the bears are going to be upset if this thesis continues to play out, because to them, there's no way you could pay this multiple for Palantir. But if the AI revolution is happening at Palantir, not at OpenAI, well, the multiple is going to get crazier because the growth is going to get crazier for Palantir. I mean, theoretically, Palantir should be able to put up even more growth if they are the ones that are benefiting from all the demand. So I would imagine that could be a tailwind for them going into Q4 as well. SoFi is focusing on expanding revenue and growing market share rather than EPS, and that is what the smart thing is to do. Amazon did it years ago. I would agree with that. The only pushback is the market share in regards to the tech platform is not growing at all, and that's an issue. And then, I guess it's how you interpret market share. So from a tech platform, it's not really growing. From a investor base, it's not growing. I mean, they're not really getting people to invest. I guess from a banking user base, that's what they're going after, which is growing very nicely. And I guess, that's the Amazon thesis where they'll monetize it later. But even yesterday, I was kind of annoyed at SoFi. So, Noto said they were launching this SoFi Plus program that would cost a certain amount per month. I thought it was gonna be like $5 a month, and it turns out it's $10 a month, and you would get access to all these features. I found out yesterday, if you have direct deposit set up with SoFi, you don't have to pay the $10 a month. And it's only for people that are not having direct deposit set up. And that's where I have an issue with SoFi, dude. And again, I'm bullish SoFi, but this is where I realize, oh my God, I thank God I'm not into this as much as I'm into Robinhood. This is not a product company. This is not a product company, dude. Like I thought SoFi was going to create a revenue stream outside of their banking business that they could monetize their users with by charging $5 or $10 a month, $4 a month, whatever. And they have 10 million users. Even if 1 million subscribe, that's an extra 5 million a month, 15 million a quarter. That helps on SoFi's EPS, given they don't have crypto that can, give them hundreds of millions of dollars of net income like Robinhood. So they need these additional streams. And now I realize pretty much everyone on SoFi, if you were going to be a SoFi Plus member, you probably have direct deposit already set up, right? Like there's no reason you wouldn't have direct deposit set up if you were going to pay for SoFi Plus, you're probably using SoFi as your main bank, so you have direct deposit. So then what's the point of even offering the subscription? Like who's going to subscribe to SoFi Plus if they're not using it as their primary bank? I'm not doing that. I'm not setting up direct deposit or I'm not paying $10 a month for SoFi, because what do I get out of that? Like unless it's your bank, unless it's direct deposit set up in some practical way, what do you get out of paying $10 a month? And so for me, Robinhood is getting us to pay $5 a month, even with all the other features, and it's not a bank. And they get to make $100 million a year, more than that now, because they have 2.5 million gold subscribers. So it was one of those things that annoyed me yesterday. It was like, again, I thought they were focusing on a product, aka SoFi Plus. I thought this was going to be something that they really go for as this is our product, and we want to make money off this product, and we want to get millions of subscribers on this product, and we want to make it so valuable, like a Costco subscription where you pay so little but you get so much more value. And that's not the case. That's not what they're doing. It's a gimmick to try to get people to set up direct deposit, which is not a product-oriented growth strategy. It is what it is. It's a different company. They don't focus on product as much as they should. If they did, they would have level 1 options by now, but they don't do that. Granted, SoFi still, I think, is going to do very well this year, but it's just not that behemoth of a financial company I thought they were trying to become years ago. So I guess we're going to see. Beneficial said, and the $5 a month value proposition is crazy. The value you get from Hood Gold is crazy good. Yeah. And see, this is the problem. This is why when Noto announced SoFi Plus, I called BS on it in November, and it's on the market open. I remember the day after, I was like, I think this is stupid, because how is SoFi going to compete with Robinhood Gold? How? There's no way in hell. There's just no way. They can't do it. What are they going to offer that's better? There's nothing they can offer. There's just nothing outside of direct deposit, which is, if you use them as a bank, that's different. But there's no other way. In this case, they're charging $10 a month. That's double Hood Gold. And it's only if you don't set up direct deposit, which means you're using the Invest platform. Why would you use the Invest platform over Hood or even Schwab or Fidelity if you can't even sell options on it, right? So I think SoFi Plus is going to be nothing. And it's not going to be additional revenue that I thought it could be this year. At least not in the way that they're pitching it right now. Because of Noto, SoFi is less product focused, but more investment banking products focused, like the loan platform business with Fortress. Yeah, I agree. Again, Noto's a banker. He's an ex-Goldman guy, so of course he's more focused on the banking side of the business. But again, this is the pushback to the SoFi bulls. It's like they want a tech multiple. Tech multiples require tech product innovation. If you want a banking multiple, all right, then buy JP Morgan. So if they're going to go the tech route, they either have to get the B2B tech platform to show progress, which is not really showing progress yet, or they need to get actual products in the hands of consumers that are technology focused. And they haven't done that yet. But the lending business is going well. And hopefully that should be enough to keep them to get more growth coming in. Amit, not everyone has deposits set up. Yeah, that's true. And they're going to get more people setting up direct deposit. But again, they're not getting the $10 a month or the $5 a month. Now, you could argue, well, they're monetizing them on the back end once they get their direct deposits. That's a fair point. I don't disagree there. I think that's a smart strategy. It's just not a product growth strategy because there's no product. It's just like a little promotion to get you to set up direct deposit. And again, I don't know. I guess I've never felt the beauty of direct deposit because a lot of my money just goes into Hood. And I just like deposit it there because I'm getting a better APY than SoFi. SoFi went from 4 to 3.8%. Robinhood's still at 4%. But I know people with like traditional 9-to-5s and stuff, it's easier to set up direct deposit into that bank. But again, Robinhood like kind of functions as my bank to an extent. So it's just a different way that they go about product division. Financial services is a huge growth machine for SoFi. I agree. That is growing phenomenally. I think it's growing upwards of 35% year over year. And, hopefully that can continue to carry the growth as well. JP Morgan raised Reddit price target to 190. Wow. Dude, Reddit is something else. This thing has not stopped. 191. It got profitable last quarter. Growth is strong. I kind of feel like it dumps on earnings if they can't live up to the hype, but it's trading at a 30 times price to sales. Like, this is one that I definitely missed on IPO. I know some of you guys got this at $34, but this one has definitely had a lot of momentum this year. Do you still think SoFi gets a 25 end of year? Yes. Look, as bearish as I'm being on SoFi's product growth vision, I'm still bullish the company because they're growing faster than every other bank, and Noto's a phenomenal CEO. I just get so annoyed sometimes with these product rollouts because I'm like, these aren't real product rollouts. Like, they're not actually focusing on building valuable products. It's just getting people's money into the bank and then monetizing it with loan originations, which is okay. It's just not the same vision as some of these other tech companies. Amit, can you comment on Oracle joins forces with SpaceX's Starlink to revolutionize cloud connectivity? Okay, so I'm just seeing that headline right now. That looks like a PR headline. So let's go to Oracle's website. Did they put that out today? No, I don't see that on their website. Let's see. Oracle and SpaceX. Is there a connection there? Oracle, SpaceX. Also, we forget Oracle has a deal with Palantir. We forget about that so many times, but who knows if Oracle's growth can also give a catalyst to Palantir. All right, so I found the headline. Oracle has partnered with SpaceX's Starlink to bring high-speed broadband capabilities through its enterprise communications platform. The partnership connects Oracle's cloud-based applications through Starlink satellite technology to enable secure, high-performing connections that provide worldwide access to underserved and remote areas. All right, there you go. Bullish Starlink, definitely bullish Oracle on this headline. I don't think this is moving the stock up 3%, but it is up 3%. It was down 14. Oracle had the worst day since 2002 yesterday. We were so enthralled with Nvidia, or at least I was so enthralled with Nvidia. I forgot to mention that, but Oracle had a bad day yesterday. So that's another thing, dude. It would make sense that Oracle has a rebound, or a lot of these stocks have a rebound after they're having their worst day in 10 years, which is nice to see. But I think tomorrow after earnings is going to be the big tale on day 3. Can these stocks hold some of the gains that they have on the rebound off of yesterday? But yeah, Starlink continues to grow. Oracle continues to get more partners, and it looks like Starlink's growth is not slowing down either. Amit, do you do covered calls? Is that what it's called when you want to buy the stock and get premium? No, buying the stock and getting premium is cash carry put. You sell a put, and if the stock falls, so that's what I did on Nvidia, right? So I got paid $300 yesterday to put $10,100 of collateral to buy Nvidia at 110 if it gets there. And if it doesn't get there, I keep the money. If it does get there, then I have to buy 100 shares of Nvidia. Covered calls, I already have 100 shares of Nvidia, and I can sell a call against it. And the market is willing to pay a premium for that. Which, by the way, let's look at Nvidia calls. Let's see if the premiums are anywhere near what they were a week ago. So if we sold a call for February 28th, wow, this is crazy, bro. Some of these calls that would be worth like $1 are worth like a 130 call is now worth $600. It was worth like less than $100 3 days ago. But now the entire options chain has been re-rated because Nvidia fell 20%. If we go into the March 7th chain, the 150 call still has 15,000 open interest. I think this number was a lot higher, but people probably sold and took their losses yesterday. But this number was I think this number was like 40,000 the other day. Yeah, so call premiums are only good on Nvidia now in that 125 to 130 range. The other ones got hit from 140 and beyond. So if I can put all their loans on the loan platform and take zero risk, yes, I agree. I am bullish on the loan platform. I think that is going to be super good for them. I'm curious to see if SoFi goes the upstart route and literally takes all the loans and just gets rid of the balance sheet risk, because then you really can't price them at price to tangible book, or you can't value them on a price to tangible book. If they have no risk, this becomes much more akin to a tech company. I don't know if that's Noto's vision with the 20-something billion of loans that they have on the balance sheet. But if they even get 10 or 20% of that off of the balance sheet and into their loan platform, that could be a re-rating of the stock as well, which is definitely a tailwind to look out for going into the end of the year. Meta 700's post earnings. So let's read the Meta upgrade. Meta's at 672, dude. Meta is not stopping. Citibank, here's what they said on Meta today. So they said Deepseek R1 should lead to greater generative AI production cadence and potentially faster ROI. Following the launch of Deepseek's open source R1 model and given performance relatively on par with other models, but reportedly trained at a significantly lower cost, it should lead to a faster generative AI product cadence, delivering greater and faster ROI. The key here is R1's open source approach, as it enables other models like Llama, Gemini, and OpenAI to learn from its efficiency gains. Interestingly, R1's efficiency gains comes on the heels of Meta announcing its plans to spend 60 to 65 billion on CapEx this year, and adds to our view that Meta's generative AI investments can lead to a greater engagement as newer experiences like search agents and enterprise launch across multiple form factors. Meta's fourth quarter earnings are this Wednesday, and we'll be listening for whether model efficiency gains could change the trajectory of product and CapEx spend among other benefits. Okay, so the analysts are still thinking there is a shot that Meta lowers their CapEx spend, which if that happens, Meta's going past 700 very easily, but that could send Nvidia tumbling. All right, so I put a poll in the chat. What do you think? Do you think Zucks takes back his $65 billion statement? Do you think he takes that back? I still say no, bro. I still say no. I don't think he does it. I don't think he does this. I think it would be scary if he does it. So I don't think he's going to do it. But if he does, we're going to have some issues. Now, granted, Meta's not going to have issues, but Nvidia might. Dude, like if he even says, yeah, it's going to be 50 billion, I think Nvidia tanks. I really do. I don't think Nvidia can handle a headline that CapEx is going down. They cannot handle a headline on this. So I would hope that's not the case. Evan says no way. It would be too soon, right? It would be way too soon, bro. You can't tell me on Friday we're going to build up Manhattan with our data centers, and now you're saying, well, China, we don't really need to. It's like, no, bro, there's no way. Or what's worse is Zuck says we're going to spend a lot of money on other types of CapEx besides GPUs, because there's a lot of things in the CapEx stack outside of just GPUs, even though GPUs are a big part of it. And if he says, yeah, well, we don't need as many GPUs anymore, but we still need a ton of storage space and warehouses and infrastructure, et cetera, that's going to be a death blow for Nvidia as well. So we kind of need him to not mess up the thesis right now. But it's bullish Meta. If he says that, bro, the street's gonna be like, wait a second. You're telling me you have $10 billion extra on the bottom line this year? That raises our estimates, and this thing gets repriced immediately. But I don't think they go that route, dude. I personally, maybe I'll be wrong. I do not think they're gonna take back that statement. Is a Meta UFC gym CapEx spend? That's a good question. Dude, I forgot. So much has happened in the past 3 weeks. I forgot Dana freaking White is still on the board of this company. Like, that happened literally 2 weeks before the inauguration, and now it's old news, but that's still something that's rather bullish for Meta and Trump's relationship at the end of the day. Where is Nvidia? Are we pumping on Nvidia? 122. Okay, got a little bit of life on Nvidia. Up 3%. A little bit of green. Little bit. Dana White will kick his ass. Meta is at 674. Palantir almost at 79. Hoodie 4850. And Nvidia trying to crack 123. Amit, if it was this bad, Nvidia would be on damage control. That's a good point. Nvidia is basically acting like nothing happened. They put out a 2-paragraph statement yesterday, and they're not doing any tweets or any interviews. Jensen's not going anywhere talking about this. So, I mean, that is a good point. Sometimes you just say nothing and let the market be stupid and move on from that. What would be crazy, bro? If Jensen puts out a Form 4 today and he bought 100,000 shares of Nvidia, could you imagine? And Jensen finally buys Nvidia after like 10 years. I mean, he's bought Nvidia, but it's been stock options that are free. Like, if he actually just uses his money to buy Nvidia, that'd be wild, bro. The bears might think that's bearish, though, because they might think he's trying to, save the company, but showing that he's bullish. But that would be kind of cool. That would be kind of cool if he buys Nvidia. Is Nvidia buying back their stock? Yes. Honestly, that's a good point. Nvidia has allocated, I think, 5 billion, no, 50 billion to buybacks. So, I mean, theoretically, you would imagine if you don't buy back on a 20% dip, when do you buy back, right? So that could be another reason why we're seeing a little bit of green today. Nvidia put out a DeepSeek generator response. It definitely felt a little ChatGPT-ish. Amit, can you explain the SARS expense for Palantir? Yes. So Palantir stock had something inside of their employee agreements where if the stock was above 50 for a certain amount of days and then above 70 for a certain amount of days, the difference between 70 and 50, which is 20, would be the max amount of money employees could profit off of. And essentially it was a free $20 for all those employees. And if they had, 10,000 or 1,000 stock options, they got a free $20,000. It depended on when you joined, how long you've been at the company, et cetera. So that is a $120 million expense because a lot of employees got to cash out when the stock stayed above 70 for, basically a couple months from November to now. And that is an expense that Palantir legally has to show, and they can't just use it as like a SBC expense that is the opposite, that is derived away from net income. Like, a lot of stock-based compensation doesn't affect net income, but this is a particular expense that does affect EPS. So analysts are expecting 5 cents, but if Palantir comes in with 1 cent, which is very likely if the full 120 million is expensed against their net income, I think they're probably going to do like $200 million of actual net income. So that's going to leave them with $80 million to divide between the 2 billion shares. Then the headline is going to be Palantir misses EPS by 95%, which is stupid because they're not supposed to. This is not a reason for them to miss. This is a technical concern around a stock price that they have no concern over. As you can see right here, the EPS estimate is 4 cents, which, if the 120 million is true, that they might not incur all of it, but if they incur a decent majority of it, they're going to come in with 1 or 2 cents and then they're going to miss. And we've seen this happen in the stock market all the time. You miss on EPS, the algorithms take over and they dump the stock because they think something is wrong with the company for missing by EPS by 50% or 90%. Having said that, if that creates the dip all the way back into the mid 60s, I will probably be a buyer there, because at this point, I think that if revenue growth is strong, which I think it's going to be for Palantir, then there should be no reason for them to take a substantial dip outside of guidance being light, which that could be a reason they take a dip, but I don't know if they're going to have really light guidance. If it's literally on a SARS expense that takes Palantir back down 20%, I think that's an easy buy the dip. But we have to see if that happens. We have to see if that ends up playing out. And again, I don't know, dude, because with Palantir earnings, this is the most confused I am going into Palantir earnings ever. Like last quarter, I knew we needed 30% growth. We got 30% growth. This quarter, we need more than 30% growth. But how much more do we need for the street to be excited? I don't know. Do we need 40%? Is the street going to look at us and be like, 30%? Are you kidding me? This company's 200 billion. Like, what are you guys doing? Like, or what were we doing buying the stock? Like that's what the street might be thinking. And they're like, we thought you guys would grow 40, 50%. That's why we bought the stock. Like, we're selling this. It's like there's no growth here. Or does the street think, okay, 32% growth guidance, that's good. We see this whole OpenAI collapse because of the models becoming commoditized, which means we think they're going to keep growing. That's good. Government business going up 25%, that's good. $5 billion in cash, that's good. Strategic investments into defense contractors like Shield AI, that's good. Like, there's so many other ways the street could interpret it. And I don't know. I don't know if the street's going to look at their growth and be like, are you kidding me? We were expecting 50% growth. This is ridiculous. Or is the street going to be like, okay, good. This is in line with our expectations. We wanted about 32 to 35% growth, and we think they'll get to 40, 50% over the next coming years. And there's no need for us to be afraid that the stock is too expensive. I think it's going to be one or the other. And then Karp is going to be Karp, and he's going to wax poetic about why LLMs don't matter, right? So I think the earnings call will be good. I think Karp's going to have a lot of energy. The company's going to have a lot of energy. They should have a lot of energy. I mean, they're growing very well. They're winning contracts, all that stuff. But I think that the growth guidance is going to determine the mood of how the market interprets the results. And then it's just up to participants on if they want to buy a substantial dip, if we get a substantial dip as well. David says, just ask Karp if you're confused. I don't have Karp's personal phone number, but if anyone's in New York, Karp's going to be at a conference in New York. He's going to be speaking about the book in I think a week. He's going to be speaking with Andrew Ross Sorkin at a theater about the book. I was thinking of going, but I don't know if I'm going to be able to make it that day. It just might be tough to get there, but he's going to be speaking at the Cultural Center in New York, 92 New York. That's the name of the conference, or the name of the place that's having the event. And he's going to be speaking with Ross Sorkin there. So that'll be cool. That's happening next week in New York. I'm not doxing Karp. That is a public event that is happening. I think it's February 7th. Let me check right here. I think it's February 7th. The tickets went live. It's like $25 for a ticket to get in there. But if anyone has ever wanted to meet Karp and you're in the local area, I mean, maybe he does a little meet and greet after. Maybe you can get a picture with him. I mean, he's going to be in New York. So if anyone's local and, wanted a chance to see him in person for $25, it's not too bad. I'm going to fly to New York to ask him what shampoo he uses. It's a good question, bro, because his hair always stays up and it kind of feels like it's always just in this, his hair doesn't really move. It's like he's wearing a piece or something on his head, but it's real hair. So I wonder what shampoo he uses as well. Now, maybe when Palantir was $30, Alex Karp decided that he was going to I think people know where I'm going. That basically when the stock was at $30, I think he looked at the chart and he was like, you know what? I should start buying Head and Shoulders for my hair when it comes to shampoo, because Palantir had a beautiful Head and Shoulders on the chart. So I'm just saying that could have been what happened. That could have been. I think it's time to end the stream. I think it's time to end the stream. I think that's I feel like the guy where everyone's throwing tomatoes at him. Oh my gosh, bro. I feel like the guy everyone's throwing tomatoes at. Even though that was good. That was not bad. No matter how much you say that's bad, that was not good. Or no, see this Freudian slip. No matter how much you say that was bad, that was good. Dude, I literally feel like I'm getting, every time I'm seeing like 50 boos in the chat, bro. It literally feels like tomatoes are being thrown at me. It was good though. I feel like it was good. Anyway, don't go out like that. Oh my gosh. Wait, Hood Futures rolled out? Really? Is it out? Also, Vlad has a op-ed in the Washington Post. I just saw the article. Vlad has an op-ed in the Washington Post. It came out today. The article is called, I'm going to read it and then let you guys know in the market close what it's about because I didn't read it yet. The title is An Investing Revolution is Coming. The U.S. Isn't Ready for It. This is an opinion piece by Vlad on the Washington Post. So I'll give you guys updates on that later today. I don't have futures yet on Hood. I'll update the app. I know some people are getting it, but if futures have rolled out, that's another revenue stream for Q1. Oh, Robin, it says update the app. Here we go. Let me update it. Let's see. I still don't have the tax lots or P&L. So I still don't have a lot of updates from the app. But if I get futures, that would be amazing. We'll have the intro on the market close. We'll have the new intro on the market close. It's just a very upbeat intro, and I didn't feel like playing it on a day when Nvidia was down as much, but I guess we're going to have to get used to it because if it's going to be the intro every day, then it's going to be there. Do I have futures yet? Do I have futures? Oh, no, they changed some of the colors of the app, though. I can already tell. Yo, this green is different. This is a different green, bro. If anyone updated the app, you can see there's a totally different green here. Even the red is a little weird. Dude, this is a different color. The app feels totally different. I don't think I see futures yet, though. I don't see any option for futures, but they definitely updated the colors on this app. Yeah, the green looks totally different. If anyone uploads it today, you can see, or updates it today, you can see. It's completely different. Yeah, Josh, it seems like you got the futures. I didn't get them yet. Josh, can you text me some screenshots of what it looks like or post them on Twitter? I would love to see what it looks like because I've not seen it on my app yet right now. All right, I think that's it. Nvidia's at 122 right now. Spotify's at 524. Apple's at 239. Apple's almost at 240. Nvidia at 122. That's up 3%. Hopefully that can hold throughout the day. SoFi's down 3%. Hood 48.45, and then Palantir 78.25 on the day. I will play the intro on the market close. I'm not going to play it right now. I'll play it on the market close. You guys will see the new intro. Also, I want to have it actually be an intro because if I play it right now, it's just playing a video. I want to have it like as soon as you guys open the stream, it just like starts. So it'll be like a real intro experience. I like the intro. I'm probably going to adjust it over time, but I like it. I think it's cool. So you guys are going to get tired of the song though every day because it's the same song. If we do the same intro every day, it's going to be like a jingle that you guys have to listen to every single day, 2 times a day. So I don't know, maybe we need multiple intros. At some point, you guys might get tired of this thing. Or you might fall in love with this jingle. I don't know. But you'll see. It's not an AI song. No, it's not an AI song. We'll mute it. Okay, that's mean. That's mean. But at least it'll be at least I'll get rid of the delay so that you guys don't join and miss me talking or miss me saying good morning or anything like that. So it'll be easier for it to play out like that. It's just the bell. It is not just the bell. It's a good beat, bro. I spent like 3 hours on YouTube trying to find copyright-free beats, and then I came across this, and as soon as I heard it, I was like, oh, this is it. This is it. This has to be it. And then I was like, okay, we're doing it. We're going with this one. I might change my mind in the future, but I like this one. I like it. Yes, Technical Tuesday is today. Technical Tuesday is today. We'll have Jason on. We'll have a couple earnings to discuss, and then he'll be on probably at like 4:20. And then we'll have a lot of stocks to talk about when it comes to all these different technicals. All right, here we go. Word of the day, and then we will get out of here. Word of the day is divulgate. Divulgate.
Divulgate.
Divulgate.
Divulgate.
to make publicly known, publish. The whistleblower chose to divulgate the evidence despite potential repercussions. The first 3 chapters of the author's upcoming novel were accidentally divulgated to the public. Okay, so I would say Deepseek divulgated the fact that it only cost them $6 million to build a model, even if that's not exactly the truth. And they definitely made it well known. And Nvidia got hit because of that. So Amit divulgated his love for Grindr. Oh my gosh, dude. That stock's still doing well. That stock's still doing well. Do you guys hate that word? All right, let's get another word. Let's get another. What's another word today? Yesterday, shilly-shally. That was a good one. Yesterday's word was a good one. This word sucks too, bro. Merriam-Webster. Word of the day is sward. Sward is a literary word that refers to an area of land covered with grass.
Sward.
Okay. It's spelled like sward, but it's called sword, but it definitely looks like a sward. No one looks at this word and says sword. No one does that. No one freaking does that. Let me see. Let's see another website. Let's see if we can get a better word of the day. I think there's another one that does it. Yeah, vocabulary.com. Okay, let's look at this one. Oh, this is cooler. This is way cooler. Harrowing.
Harrowing.
Being attacked by a hungry shark or being chased by an unruly mob on the streets can be described as harrowing, which means provoking feelings of fear or horror. Which is, I guess, what Deepseek did to Nvidia investors yesterday. So there you go. All right, that's it. I will be back tomorrow in the morning, and not tomorrow in the morning. I'll be back in the afternoon, and we'll play the intro. And I'll be back tomorrow in the morning, but also today in the afternoon. Also, I'll have a daily Palantir video later today about what Deepseek means for Palantir. So we'll go deeper into that. But yeah, market close. I mean, at this point, Technical Tuesday, it lasts like 5 hours, bro. Or at least it last time was 4 hours. So whatever stocks you have, we will get to hopefully all of them. And we'll try to get Jason's take on if any of these are in a really good technical buy the dip situations. And that's it. We'll go from there. All right. Thank you, everybody. Appreciate you all. I'll see you guys on the market close. Bye, everyone. Have a good one.